Hello, everyone! Welcome back to the RationalVistor.com's. What is this? This is our weekend frivolity, our Broiler Chicken Show. I suppose at some point down the road, maybe we'll do fancy voice-ins. Man, it's a lot of work, though. I just like to hit the button and just go. I suppose maybe one day I'll get fancy, editing software and all that kind of stuff. But oh my goodness, that's a lot of work. But I suppose theme songs and stuff are in order. This is your weekly 2.5 hours of mindless rant. And I'll sprinkle in, hopefully, a couple words of wisdom along the way. Let's be clear from the get-go. This is not financial advice. I would consider this, if anything, and I've said this repeatedly to you guys, edutainment. A hell of a lot of Brian's opinion. Let's just make sure OBS is working. Mindless rant. Hey, there we go. Yep. I do not have any corporate sponsorship. Do I have a vested interest in you joining TRI? Sure. I think that's probably a good reason, a big reason why I'd like you to, see enough value in all of my ranting and like I said, sprinkling words of wisdom that after a while you go, you know what? Maybe either I'll donate to one of his causes, like our weekly crypto show. I've sort of focused that as a donation cause to get a booth up and running in Decentraland. Sort of a fun little project on my own initiative. If it comes about, it comes about. Great. If it doesn't, no big deal. Or, like on these weekends. The interesting thing is you could technically play a game TRI, and I bet there are probably a lot of people that do game TRI. We do the 30-day trials free, and if you wanted to, you could just sit and mine TRI for free. I don't even think really I even come across as a hard shill in these weekly offerings. So... let's just be clear from the get-go. I'm not telling you what to buy or sell. Certainly have no vested interest in what you buy or sell. I do have a vested interest in encouraging you to come join our community. I think there's lots of value in it, and like I said, hell, you can game our community if you want, if that's the type of person that you are. I do like the idea that I've worked 30 years in this business, and I believe that there is a skill associated with running a small business of trading. No doubt about it. This is a skill set, and really, no doubt about it, this is a profession. In this business, we affectionately call it the process. Am I going to feel reservations about a program that I've built to teach you that skill set of successfully running a small business of trading, or that thing called the process? Absolutely not. I believe that that's a value proposition. Whether you sign up or not, it's up to you. We've clearly demonstrated in a lot of these free offerings that, there's one gentleman in particular who's written basically a full user's manual on how to trade just from these free offerings. So, I don't, you don't hear any tone out of me of regret over that. If you want to take my offerings and build sort of a framework of, these are kind of the rules some 30-year crazy old gnarly veteran who's been barking away on social media has been squawking about. And I've tried them out myself, and it turns out I kind of like some of the ideas, and build a whole framework out of running your business around that. I think that's a fantastic idea. Yeah. You know what? The thing is, somebody here just in the hangout here is like, well, how would you feel if somebody sold it himself? I'll be honest with you. It's not really that big of a deal to me because this is really more like the universe's information. I would argue that. I'm going to close my window here because it's a little bit loud out there. I would argue that, a lot of the stuff that we teach on the site, it's not really like it's like we reinvented the wheel. And in a weird sort of way, it's such a hard lesson to learn. My crazy story, the only reason why I learned it is because I lost everything. Everything. Every fucking thing I lost. And so I had to start basically from nothing in my soul, And just understanding that if you give unconditionally in this world, the universe takes care of you. It does its own thing. It takes care of the other side, things like monetary gain and stuff. So it's a hard lesson for a lot of people to learn. So really, frankly, I don't even really care. I mean, it irks me, for the record, it irks me when people take concepts that I try to use to teach and then they kind of spin it their own way and then teach a whole bunch of people their spin, and then they come to me and say, oh, I want to learn this strategy. And I'm like, well, that's not exactly the context that I use that term in, and I have to teach, sort of unteach them. Which is kind of a pain in the butt, but what the hell, who cares? If that's the price to pay for all this, I can live with that. I have to say, it's funny how some souls just resonate with you. It's just, you are karmically destined to resonate with them. And it's beautiful how, I don't even know whether Dav even knows it or not, but it's beautiful how Dav's soul just keeps resonating with me over and over and over. I do a weekly show on Wednesdays for fun. And I just asked randomly on the site, hey, anyone want to do this? Volunteer, help me run the spreadsheet. We'll do like a crypto review show like we used to do with the Commodities guys. Bunch of guys all chimed in, and I think one or two of them were Dav people. So Dav is continuing to resonate through my karmic experience. It's fascinating. Anyway, so I hope he's doing well. And good to see that a lot of his fans and minions and stuff are now acting from a position of strength, acting intelligently in the marketplace. When I used to do those Coinergy shows with the gentleman Alex Sturck, he always used to say, the best thing about you, Brian, sorry, it's not your trading. He used to say the best thing about you, Brian, is your financial literacy that you're bringing to the space. And hey, I concede that, what you have to do as an individual, and it's actually something that I've really learned over the past few years even. You really have to, like the, what's that, the image that you need to, the image that you need to understand, and it's so cliche in this space, but you need to understand this. I typed image. I don't know how it goes. The image from the Matrix, right? Where he's standing there in the kitchen with the old lady. It's so cliche, but it's so true. So it's fascinating how this silly movie it's like Dav. Dav, it keeps resonating back in my life. So what I've learned over the past few years, and actually we run a day trading room on TRI, which is, man, it's so cool just to hang out with those guys. But each and every trader in there is very unique and very different. And really, they all know themselves. They all are speaking to the person that they are. And you can see it through their trading. And it's something that used to always puzzle me is a lot of the pit traders down on the S&P, like it used to be that the prop firm that I worked with, the two guys that were sort of the barkers of the firm, they stood between the Dow pit and the S&P pit on the CME. And they had like a squawk radio, and of course we would just sit and listen to the floor, and Eddie would just sort of chat away through the day. And it used to really freak me out because we were just sitting there doing our thing, and all of a sudden some trader would walk by and go, "Hey, what's that Beamish guy doing?" And it's like, whoa, what the fuck? I mean, it would really freak you out when you hear that, I tell you, man. So I trade a very particular style, very, very me, things like my bot setup. It's very Brian. Actually, speaking of which, I think there's probably a bot working away here on the corn. But it's very Brian. And that's sort of speaking to that know thyself. And actually, it's interesting because I came to things like TradingView and crypto to begin with. And to a certain degree, I just sort of assumed that a lot of people kind of traded the way that I did, which wasn't a good assumption. And I've taken quite a few years, and actually, like I said, this has really become apparent to me, and it's really changed sort of my perspective on how to trade, and really teach you guys the most effective way to do this game. Has been the evolution of this TRI day trader room, and I'll tell you, it's a if you want value, just get on the damn 30-day trial and, mine the site subscription renewal. And just listen to the day trader room through the morning. Like, I think Kevin posts the YouTube feed. I mean, that's fucking gold. I mean, like, seriously. That's like... People would pay like literally thousands of dollars a month for that feed, the shit that we pass around in that room, I swear. And it smells good. And for the record, Brian is a damn handsome guy. You should all know that, and I believe that in my heart. That one goes out to you, Kiran. Hugs and kisses, love you, babe. I love Kiran. Excuse me. I love Daniele, I love Grim and Kevin, just their honesty of their soul. Like, pure day traders know that they're going to get stopped out, know that they're learning, know that they're not perfect, know that, this is a trader's life. You have to be humble. And man, it is cool just sitting in there listening. Oh, and Andrea. Can't forget Andrea, our German. Actually, I guess Daniele technically is German as well. Oh my goodness, these people are acting so well, so beautifully. And we've had a couple of new additions, Thomas in Vietnam. And who else? Another Frank the Tank! Oh my goodness, Frank the fucking Tank. It's cool. Anyway, so it's a lot of fun. And I mean, we just posted in the lounge. If you are a site member or a school member, it's a lot of fun just to watch and live vicariously as a trader. But it's, I guess the point that I'm trying to make here is actually a lot of the guys, especially Kiran and Daniele, they actually trade very similar to the way that the pit traders would trade, just jumping in, grabbing the ticks here, okay, can I get a free look, quickly move, throw on two, okay, market moves a couple points in your favor, hop off on one, stop to scratch on the other. Okay, let's see if this free look works, kind of stuff, and just working the book. And especially in the pit, because what would end up happening, and I don't know, in this world maybe things have changed a bit, but it used to be the way that it worked was and this is my old prop firm was called Top Step, right? But here's a trading pit. This is empty, right? This is full in chaos. But what would end up happening is like all the major firms, Goldman, Merrill, all that kind of crap, right? They would stand up here and they would literally, shoot orders down into the pit, right? And like Goldman would stand up here, they'd be talking to their trading desk upstairs, right? And the trading desk would say, okay, we got 1,000 of these E-minis that we got to get, or not even E-minis, 1,000 of the big boys, which we got to get rid of, right? So, the Goldman trader would walk up here and he'd go, okay, I got 1,000 offer, give me some bids. And one guy would go, okay, I'll take 2. Another guy would go, I'll take 5. Another guy will take 7. They're kind of like, Eddie used to always describe it like they're koi in a koi pond, right? And the Goldman trader there is just dangling them out. And of course, he's dangling them at a discount. They would get filled, and then they would quickly run over to their trading desks and hit the fucking E-minis that are trading at a slight premium, because this Goldman guy, he's letting them go at a slight discount because he's selling in size. So that's the way it used to work. I mean, nowadays it's kind of, it's very algorithmic. I think you could argue the bots have taken over. I don't think that's questionable at all now. And it's interesting. I'd made reference to Alex there earlier. I think he learned, like as sort of an insider of one of these cryptocurrencies, and a participant of that last bull market, he kind of learned the inside workings of the cryptocurrency industry. I see some of the gentlemen that have graduated from TRI, this past cycle, are working within the industry as well, and they're learning the very hardcore lessons that, like the super insano traders, algorithm bots. I mean, wow, they go in deep and they go in hard. Alex said, I remember him telling us once that he knew this one guy that with one push of a button, boom, he could fill an entire order book, both on the bid and offer for any cryptocurrency instantly, and have the algo automatically take over the cryptocurrency, just literally trading, and run an entire program. And you would have think, looking at it, that it was a whole bunch of different people trading the asset. Just a push of one button, boom. And not like push the button, boom, price pops like 10x or whatever. Boom, push the button, the bid side completely fills, the offer side completely fills, and the algorithms that he's written start trading back and forth against each other. So it looks like, oh wow, this is a nice liquid market. Look at all this. And it's all bullshit. Welcome to unregulated markets. But I don't think a lot of people in this space realize how dangerous and how corrupt this space really is. I mean, they said, China wash trading, all that shit. I mean, why would any of that change? Well, anyway, caveat emptor, live and learn. I even saw some guy, actually a great sign that probably Bitcoin's bottom. Oh man, the emotions in this space are coming out hard. And I even said to one guy on this YouTube feed, I said, fuck man, tone it down. What the hell? Why are you so over the top? And that's a person who's just taking way too much risk. And that's what scares me. It scares me like fuck. That, a lot of people just taking way, way too much risk. In fact, the level 1 course program people right now are doing their risk management module. Actually, I wanted to start this video a bit earlier today because I like to rant for about a half an hour anyway. And they got a really, really long module, risk management, fun party. Woohoo! And it's almost like, anyway. So they are working a way through that module right now, and when they're done, they'll come in with their questions. But one of the questions that I even said, be sure to ask that in the Broiler Chicken's questions part of the show I like to do here on the weekends. I said, we should talk specifically about that issue. Anyway, so they'll be coming in here shortly. In fact, actually, maybe we should go see if I can get that document. Where are you? Is that the Kavarkinator? They're passing this around in the classroom right now. Good old Kavark. Kavark is so fucking awesome. And there are a ton of Kavark setups coming in right now. That's the cool part about it. So that's the Duke of Roswell. And actually, he's one of our level 1 TAs. He's a fantastic guy. And what I wanted to show you was, I think I even tweeted it out. Mind you, I'm getting distracted. Shiny object, shining object. Wasn't I doing something else a minute ago? Well, there's some guy on YouTube who was bitching at me on YouTube, and I'm like, tone it down, just calm down. You're way too emotional. Trade your plan, trade your setups, and then he fucking just goes off the deep end. And I'm like, if you don't calm down, I'm gonna ban you, and all that stupid shit, mute and all that stuff. God, I mean, I must have to do that on YouTube at least 5 to 6 times a day with all these marketers. Bob on WhatsApp, 8947283, and there's asterisks between the numbers. I mean, and what's so funny is they've got the bots that come and do replies. So I don't know whether you're aware, but just be aware that I am constantly having to, block and mute people on YouTube and Google and stuff. I mean, it's incredible how much it is. Literally every single day. So, at this point, I don't even care about banning and blocking people. If you're just being a nuisance, out you go. Give everybody the benefit of the doubt. And I even said to this guy, you get 3 strikes. And he got to the point where he's just okay, buddy, you signed your fate. And then I thought it was hilarious. He chased me over to Twitter. and he's sitting on Twitter barking at me, which is so funny. I can simply say this. If you are emotional about the price of any of these assets and any of these trades, you are taking too much risk. It's just that simple. And actually, one of the questions from the level 1er, I was just mentioning this a moment ago, it should be in their document. One of the questions from one of the level 1ers was, the 2 rules of investing are rule number 1, use some sort of algorithm, some sort of system, some sort of if, then, else, and try to have 3 unrelated reasons. If you can do that, then believe it or not, investing is actually pretty easy. You just always want to make sure that the reasons why you're investing are exactly the same. I'm buying into this company because it's got a really great share structure. The insiders are long from the level where I'm buying right now. And maybe you want to, those 2 fundamental reasons are alone. I'm like, hey, I'm interested. But then maybe you want to go over and look at the chart. This crazy Beamish guy says you want to try and buy in reload zones. And it happens to be in a reload zone. And then maybe, I don't know, there's a big fat W staring you in the face. That Beamish guy says, sometimes when you see these W's, if I buy, odds are things work out. Nothing's guaranteed in this world. Nothing at all. But actually, like the level 1ers are doing right now, you can actually build plans where it's okay even if the idea doesn't work. Just make damn sure that when your ideas that do work, you get paid. That's ironically enough the secret to this game, but nobody gets that shit. It's critical for them to be right 100% of the time, and they just don't get that actually it's okay to be wrong. But when you're right, you got to get paid. Oh, well. So, that in itself, and I thought it was interesting because I remember last cycle, the spring of 2017, there was a Bitcoin ETF that was going to be proposed, and the SEC shot it down in cold blood. And then there was a big, and half of the reason they cited was wash trading in China and all that kind of market manipulation stuff. So after that, there was a big talk about this one guy, and he got all upset about Bitfinex and Tether. How the whole thing was a big fraud. It was all going to end in disaster. And I mean, he was emotional. I mean, every fucking day, it was just over the top. And anybody who was saying anything, oh my goodness, he was going to fist fight you out in the alley. And yet the market just shook it off and just started a bull charge and just didn't look back. I got a funny feeling Mr. Bitfinex was a hired voice. And the worst part about this is that there's no way to prove or disprove that allegation. We live in this fucked up social media fucked world. You don't even know if I'm even a real human being. I might not be. Have you ever thought about that? Have any of you actually met me in person? Give you a moment to pause and think about that. And even if you did meet me in person, how do you know I'm actually a human? You don't know. I mean, I think I'm a human, but just to fuck with your heads. Problem is, this world, it's so fake. I mean, this is all about, fake news and fake media. I mean, good old Trump, he's got a case. I mean, it's a joke, this world. And I believe that probably about 80-90% of the shit that you hear in the world is actually somebody playing you. They've either been paid to tell you a specific message, or they have some sort of agenda that they have to meet. All right? They got quotas. It's really sad, to be honest with you. I find it very, very sad. I don't know who you can trust in this world. I don't even think you can trust anybody. It sucks. I mean, it really sucks horsecocks. So, I mean, these people are actually, I don't know. I mean, you people just watching this video, if you come to this often, I mean, just affirm or disaffirm. Do you get the impression I'm shilling you? Do you get the impression I have some sort of hidden agenda with these videos? I hope. I mean, I'll just give you I'm not going to say anything. I'll just give you a second to respond in the text here. Because if it comes across that I am, then maybe I should just stop doing these. Let's see. Are you calling catfish us? Are you catfishing us? I don't know what that means. Is Brian Beamish just a simulation? Please, okay, so one person is like this. You are as red pill as it gets, Brian. You are the best. Appreciate it, BT. I don't know whether, I don't know. I mean, there's like 50 of you. There's about a half a dozen of you in the hangout here. I don't know. I mean, you tell me. If I come across as like I'm a big salesman, then I'll either dial it back or I'll just stop doing this. All right. Well, Ewald says, "Hell no, you must go." So it's there's always like one person. And then I have to ask myself, kind of like that Bitfinex person. Okay, this anomaly in the space. It's kind of odd, isn't it? And you get these, and I don't know whether it's actually a planted person or whether like they even have cases in like, back in like, I remember back in the 70s and 80s, like Hollywood stars and stuff like that would have like stalkers and stuff like that, or just, they go a little bit nuts over the top. I remember there was one gentleman last cycle who got really, really upset at me, and he made some accusations, and actually other people watching the video were like, no, actually that's not entirely true. And in the class and stuff. So I was really proud of that. I hope this person doesn't get to that point. But I do believe that there are enough of you that if this particular person is like, hey, this guy's really shilling and total bullshit, that you would at least remind him that probably on balance I'm not that type of person. I'd appreciate it, because anything I say just comes across as just nonsense. And I even got to the point where I was like, there's no point in even us chatting anymore. So I guess I'm seeing a lot of that kind of behavior right now. Is it paid for behavior, like that Bitfinex trying to like stir the honeypot, get people really freaked out? I think so. I actually do. And the worst part about it, like I said, you can't believe anything in this world, so there's no way to either prove or disprove the allegation. So it's sort of like I could go, you're totally paid to shit disturb here. And he'll go, no, I'm not. Prove it. And it's like, okay, well, that's the end of that. And I go, yes, you are. He goes, no, I'm not. And I go, yes, you are. So... please, anybody watch this. All this is PMA. That's the whole point of this. If you don't get value out of this and you're not having fun watching this stuff, then don't. I won't be offended one way or the other. So, and I have to say, considering the really shitty job I do at marketing this place, you guys have put a lot of trust in us. I have to say that it's overwhelming, actually. So I'm very pleased. So let's keep on keeping on. I do fully appreciate. Like, it's interesting. I believe that this was a Jupiter Saturn Pluto event that just happened here, and I find it fascinating. I'm going through my charts and I can't find the damn references. So, yeah, well, that's the whole point, right? Is if this shit didn't work, then the whole thing would be a waste of time. So, yeah, I mean, there's the thing, right? Is I don't give a shit about defending the material because it works. We've made a lot of money. So it's just all I'm doing is telling you the shit that we do use to make money. So if you don't want to use it, fine. So what? No biggie. Anyway, and like I said, the sales project part of this is really all about, teaching you the process, which, yeah, I mean, fuck, man. I've been working 30 years in this business, learning how to run a small business, successful small business of trading. It ain't easy. And actually, I've even seen some people that are, they've been going at it for 4 or 5 years, even with me sitting right beside them. They could totally mind me. They're doing it on their own, and they're just not making it, which I find fascinating. But, it is what it is. You follow the process, you do follow my teachings, and the results are actually quite startling. Okay, so what I wanted to do here today is, like I said, this program is really for the level 1ers, but right now the level 1ers are working away on risk management, and they're sharing pictures of Sharktoshi. I also wanted to show you, while we're waiting for that, this is actually an image of that Sharktoshi setup. That's actually where I was going with all this to begin with. There's a lot of these assets that just actually look beautiful. Like, if you can buy like a pullback of 88.6 of a market's range, oh my goodness. And I've told you before, I often see, you look back in hindsight, you often see W's actually form right off that 78.6. So, you might want to wait for this trend line to be broken and a nice W on the other side of that, which will probably come in sometime through the summer. Or you could be in there fishing for value, working stink bids, and that's basically what this image is. You level oneers watching this later on. Sharktoshi, there he is, but this is the Duke of Roswell, the Kavarkinator. And the shark setup on the site was to basically just buy that 78.6 pullback of the range. You want to wait for W's, you want to wait for bullish divergences, momentum, all that kind of stuff. In fact, actually, somebody was tweeting out something to that effect today as well. So I think actually it was off of these. Somebody was kind of like, yeah, but do you want to wait for W's and all that kind of stuff? And I was like, yeah, sure, if you want. Where was that? So yeah, see, this is interesting. This was in October 2019. Sharktoshi actually looked into what we should be expecting for 2020. What do you think? That was pretty damn accurate. Restrictions, depressions, austerity. Oh, wonderful. Governments and authorities and corporations and destruction, debt. Actually, we haven't got the crime yet. Let's hope that stays down. Anyway, kind of funny stuff that I like tweeting out. Yeah, here's like an image, right? I put this tweet out here. This guy just going right off the deep end. So, almost like a little bit overboard, really suspicious. So that's why I put this note out. Something just doesn't smell right about this. And here's the thing, right? Do you guys see how we're at the bottom ends of ranges here? So, if we're at the bottom ends of ranges, what are we supposed to be thinking? Are we supposed to be thinking selling? What do you guys tell me? Is there a lot of crime in the U.S.? Is it really ramping up? I didn't know whether it was. Fabian, we know that's why we have to have an instructor. We got 2 TAs, and we got Brian throwing in his fucking 2 cents from the sidelines. So, if anything, I want to keep like over, and of course, we got the pre-recorded lectures. So, the point here is something just didn't smell right about this, right? Going, fucking sell. Like, what? This, you know what this reminds me of? This reminded me of, do you guys remember last year in the middle of all that fucking insanity as in Oregon and shit? And there was, there was some guy walking up and down the fucking freeway in Washington State lighting the fucking ground on fire. Do you guys remember that? And it was completely swept under the rug instantly. So then that must have been totally pre-planned. And then, of course, the media was instructed not to do anything about that information. So that's the same as this. Exactly the same. Something really stinks about this. So, I don't know. Don't get sucked into this nonsense. These stupid idiots. I was going to fucking mute him, but I was like, I thought I was going to do him a favor and just say, you know what, just calm down. Let's not get into the business of predicting the future, right? And then he comes back going, well, you predicted the future. And that's why I started the video off here with, you know what? This is edutainment at best. You want to come and learn the process? Learn our school and learn the process? You can make great money trading, and you don't get sucked into this emotional response. To me, somebody's either a paid shill and is really trying to freak people out here, or they're taking way too much risk. Way too much risk. So, anyway, let's see how it goes. To answer that level 1 question, so if you level 1ers do watch this afterward, let's actually, I want to see how they're doing. Let's see how we're doing. Going in here. Been ranting for 1 hour. So I'm just asking what the level 1ers, where they're at, how close they are. because they did ask some questions, and there's one question that actually speaks exactly to this person that I think, like I said, either they're a real person and they're paid, and then they're going to be fucking relentless, and it's just never going to end. Or they put on a huge bet, they're massively underwater, and now they're fucking heartbroken, they're angry, they're vengeful, and that's really dangerous, because those kind of people, you know, if they're in a really bad financial situation, they can do really, really over-the-top things. So, you know, if anything, you know, let's see, Mr. You know who I'm talking about. Why not take a positive spin on this, and let's maybe, you know, bring you into the fold. There's, where is Mr. G8 here, who wrote that user's manual for for trading on the YouTube page? That dude's fucking over the top cool. You know, we need to hook you up with Mr. Bitter here, and maybe you talk to him totally free. So, you know, TRI is not even involved. This is totally positive karma out there in the universe, right? Maybe go that angle. And Mr. G8, I can never remember your name. It's like Great something like that, but it's like a G and an 8. You always see his comments and shit. Maybe you can help this guy, right? And then that way we know there's no conflict of interest. And if he tells you to fuck off, then obviously he's a shill and he's got some sort of agenda. I don't know. The most important thing out of all of these videos and everything that I'm blabbing about here is the process. That's the most important thing out of all of this. Brian's political opinions, useless, meaningless, pointless. Everybody's got an opinion, everybody else has got something else. Brian's opinions probably stink worse. That's fine. But it's my show, so you want to have your own show? Great, you can have all your opinions. You guys are watching me. I'm not watching you. That's a luxury I get for running this damn video. And I don't have any corporate shills, right? There is no corporate shill. What does that mean, Kevin? Is that happy or is that an angry face? Kevin put some sort of message in the hangout. No agenda, definitely, right? So, you know, the people that do have corporate agendas, they could also be paying those kind of people to come and just shit on my head, right? So that's definitely possible as well. So the gauntlet has been cast, Mr. Negativity. I'm going to ask Mr. G8 as a positive karmic event to reach out to you and share his user's manual, which he built totally for free, and you can somehow get some value out of this karmic experience. Anyway, that was interesting. Somebody did reply back and sort of said, well, how would you do this? I mean, the irony of it all is that there's a million different ways to skin this cat. And this is actually the hard part of trading. And it's what the sort of level 1ers are going on right now. Hey, Brian. Sean says hello. Oh, awesome. Cool. Thank you, KMCRAE67. My opinions are quite rose-smelling. I don't know. My opinions are going to get me shot one of these days. That's probably what's going to happen. I don't know. All right, so later today I'll make time to check log entries. Tag me in this room. Oh, so I don't know whether they're getting close or not. I don't see either of the TAs in here. They're still working away, so I guess they're still. So all right, I'm trying to fill time here, waiting for the level 1ers to finish. Got all the rants in. Got actually an interesting twist in this, right? Maybe the gauntlet has been cast and maybe we can change this guy's life for the better. Who knows? I think it's really important as a trader, super important that you have to, you got to know yourself. You have to speak to your strengths, but also acknowledge your weaknesses and build, stuff within your plan to address those weaknesses. You know, if you can't get stopped out, like you can't handle that kind of risk taking and being told by the market you're wrong, well, then margin trading isn't for you, right? It doesn't mean you can't invest, right? You can always do things like little old lady risk management and all that kind of stuff. But you really have to know yourself. And so back to this kind of tweet, this kind of person was like, well, do I step in and buy here now? And it's not so simple as, well, that is the bottom. It doesn't really work that way. I mean, I don't know. Can you predict the future? I don't even think it's in your best interest to try and predict the future. That's a mug's game. What I will simply say is, what are the odds that if I come in at or below reload zones and I start accumulating, that we'll see at least a test of the top end of the range down the road, which of course is going to translate into, hey, that's higher than what I bought it for. Well, the odds are pretty good if you just run the numbers. I mean, in our level 1 program, we teach that there's actually a pretty good statistical probability. I wonder if anybody on YouTube even knows this. And this is sort of your little value drop. About how often do markets trade in a range? Maybe that's top end of the range, that's bottom end of the range. We're going to just trade back and forth. How often does that happen? It's actually a pretty high number. There's a lot of people that, like this could be like a 10-minute chart. There's a lot of people in futures trading that would they'd look at that and go, holy fuck, I'd get on that and look to sell at these gaps. It's a pretty easy trade. But that's the irony of this business, right? As I think the tweets I had put out earlier in the weekend were kind of like, this is the only business where when stuff goes on sale, nobody wants to buy. It's just the way it is. Now, sometimes, right, you think you're buying at a discount and the market keeps going and boom, it isn't the bottom. So that doesn't mean you need to shoot your wad, the whole damn, I like the idea, don't ever take more than 5% risk on your portfolio on any one single idea. And that way, if it goes off the board, so what? You lose 5% of your account, big deal. It's a good rule of thumb for like investors running like trading books and stuff. And really most investors, when they see on a 50% loss on a trade, they're like, man, that's it. Let's just book the tax loss and end the torture. So there is a very specific risk taker that trades at. And most of my sort of client book was a stockbroker would be those people. And we call them Joe Six-Pack, right? Yeah, typical Joe Six-Pack. So there's many ways to handle that risk, but just this, if you can just force yourself, and this is what kills me, is that 2 or 3 months ago, I couldn't stop you people from buying fucking crypto. I could, as these things were charging higher and higher, look at them all. I mean, these price increases are crazy. I literally could not talk logic to you people. I couldn't. I actually had a guy that I thought was a pretty good student who went on to be quite famous in the crypto space actually become a total hypocrite and just change all the rules. You don't have to use TA to justify buying. You don't have to have W's. They're pointless. And then, oh, fuck me. So I'm actually quite shocked at how quickly the sentiment has collapsed here. Absolutely collapsed. Couldn't believe it. So, in a weird sort of way, if you're bullish of crypto, this is a good sign. You want the idiots that don't really belong in this space, you want them gone. So the people that are actually doing value work, who are building this cryptocurrency space to make a better, brighter, stronger future, they can get to work and they can demonstrate value. You're not going to hear institutions come in as and give you specific price points buying up here. The headline will be, well, JP Morgan starts a crypto trading desk, but that doesn't give you a price point that they bought or sold at. So you know, you have to understand, if you want to be good at this game, you have to understand you have to sell when other people are yelling. And then when other people are crying, that's when you should be doing what? See if anybody on YouTube can finish that expression. You got to learn this, man. Especially with cryptocurrencies, because they're commodities. And I even put out, 2 or 3 weeks ago. Commodities are volatile by what? You all should know this line like it's out of your butt. You guys want to trade commodities? You're in this commodity space. You better get used to this. This is your life. Thank you, Ewald. Kevin says, what, Keller? Who's Keller? I think that's Colleen. Is that who you're talking about? Colleen's so smart. The good part about it is Colleen, she's bought the fucking Kool-Aid, bought the punch. And it's awesome. She just spits out the fucking gospel. And all you gotta say is, okay, whatever Colleen said. Hallelujah! Drunk the Kool-Aid. There you are. And it's Hawaiian punch, too. Oh! See what you guys are saying here. Buying when they're what? Oh yeah, they I get two different conversations going. So over on YouTube, what are they going on about? Buying, it is hard to change past thinking. Cost of production. Well, I don't think we're gonna do cost of production now, BT. This orgy's too fucking strong just yet. Cost of production kind of revisits. I think that comes next year. Like maybe this time next year, we could be down talking cost of production numbers on corn, which of course is going to break all the fucking Bitcoiners' hearts. Maybe even a year from now, right? It might even be like a while. I don't think we're gonna do the cost of production thing just yet. Yeah, like when I try and think cost of production kind of idea on the corn, I think this study. And the weird thing is we don't even really know. I mean, this study was put together by one of our site OGs, Shane. He's such a fucking sweetheart. And then he went off and fucking now lives like a fucking hermit in the back of a truck out in the Canadian bush. Never see him. He's just anyway. Every once in a while, we get to hang out with Shane. But anyway, he built this study, and I like this as sort of when the public is not interested in Bitcoin, and they're not all fucking just circle jerking, and it's like Michael Saylor walks on water, and remember, oh god, like where did this Elon Musk all of a sudden become a crypto expert kind of thing? I mean, it just came out of nowhere. Like when we go back to the days where, we're asking, okay, who's going to survive, right? And all the it's wrecked stock. And you go on social media and everybody just has downside negative price targets. And we're, 70-80% of previous up move is over, all that. Then, okay, we're ready to bottom, right? But it is interesting that Shane's sort of minor metric, and of course this is on having some assumptions. Shane might even suggest that I change some of his assumptions, so maybe next time I see Shane I'll ask him what assumptions he's having for cost. But you can see they're still sitting down here. What is this? This is like basically about 8 or 9 G's. And I kind of like that because I think that the last halvening, prior to that, the cost of production was about 2,000 to 3,000, like sort of the base 51% attack kind of cost of production kind of talk. Then after that, that goes to 5. So then that means the next halvening, this will go to 10. So right now, the current cost of production is 5. The miners here, you can see, they're sitting between about 5 and, 8? And there's probably a bunch of layers of miners. Like I only put on the 17s and the 19s, but there's tons of miners that are scaling all the way up. So my hunch is that whatever the industry standard miner is right now, and maybe while I'm blabbing away here, somebody can actually go and Google what is the typical industry standard generation of these S miners in use right now. And that will probably tell us what the probably basic cost of production is. Now, my hunch is it's probably somewhere in this reload zone. That wouldn't surprise me at all. But by time we work our way to the next halvening event, I think we'll probably see that cost of production starts lining up with the 2,500, 5,000, 10,000 is the next one, I think. Of course, it's just opinion. One thing that I've noticed here, this is what I think is going on, is just don't know whether I have it on here or not. No, I don't. I guess like there's two things. So one thing I would say is, speaking specifically about Bitcoin. Maybe it was looking for the parabolic study. So it might have been macro Bitcoin. So many charts. Head explodes. Too much. Max, strange, no quote, presumption, nope, not here, not there, nope, nope, nope. Sorry, I went terribly unprofessional of me. Wow, too many charts. I can't even find it. Fudge. Yeah, well. Anyway, I wanted to... Oh, actually, here it is. Well, good thing I didn't give up. So, there's lots of these stock to flow kind of people that I kind of like this thinking. You can see how we kind of mapped out sort of, peaks and troughs on these parabolic curve growth cycles. I don't know whether we stalled out here. I mean, I would have thought we would have stalled out up at the red line up top here. So it's interesting that we came up against this purple line, and you can see that we're sort of kind of fractaling out against this right here, and I'm not quite sure exactly where that goes. It might be a little steeper. So it is interesting how we're playing sort of there. I would have thought by the end of this move that we would have punched all the way up top here. Well, we'll see how it goes. This was one of these. And then this one I think is a little bit more of a popular one. I think that Benjamin Graham, I think his name is. Oh, it looks like are the level ones done here now? Oh, they must be. There's these the level 1 arrows coming in here. Going, we are done. Ready? Total COP for BTC, saying about 11K. Yeah, okay. Sorry, we are late. No big deal. I mean, I've just been blabbing away here for the past hour, so kind of just filling time. All right, cool to see. Kevin, do you happen to have that Q&A document, that extra document? You happen to have that link? Thanks. And everybody give a big shout out to Kevin. Does such a fantastic job around TRI. He does a whole bunch of different jobs. So I want to give a big shout out. If you see Kevin, if you happen to run into him in the hallway, give him a thank you for me, because couldn't run this place without him. All right, let's see if he's got a link for us. Right, so just to finish off that thought while we're waiting for Kevin. Have we come up and banged up against our purple? I personally like that we're in this scenario here. This was the 2013 bull run where we had to take a bit of a pause halfway through the year, where ultimately we wanted to go up and bang up against red here up top. I don't know. Call me a cockeyed optimist. That's what I was kind of hoping, kind of thinking. This lines up with that Willy Woo kind of forecast of, us all getting stinking rich off of Bitcoin here over the next little while. But it is predicated on the fact that it looks like good old purple line here. Man, we stopped hard against that line. Bang! Ouch! That hurt. And actually, it's interesting, speaking of crystal balls, Kevin actually was the one pointing out this Foggenbaum level here all spring long, going, that's been my target. And on balance, I got to say that's a pretty darn good reference. It also makes sense, too, why we stalled here. 50 fucking G's. That's a big, fat, round number if I've ever heard of one. So, looking at that image, we're going to at the very least need to see a fractal going the other direction for us to start getting bullish again. For now, we're on sort of hurry up and pause. If anything, you can even see that we might even fractal out top here. If we lose that monthly low, what is that? That's 3261 and a half. Call it 30 G's. My hunch is we're probably going to take a serious dip down here. I don't think we lose that low in earnest, but I could very easily see them play around with that low. That wouldn't surprise me at all. Kind of like this shows, right? I mean, this is going to be some serious volatility over the next little while, folks. Just get used to it. Welcome to our new reality. This, like I said, I like this kind of thinking here. But hey, the market could fractal out here and it could just cascade right back down to the bottom line, which I think is actually our cost of production, around 10 G's, 11 G's, 12 G's, you see right in there, and just sit there for the next couple of years. We could easily do that. Sure, why not? No reason why I couldn't. I don't think it's in any of our best interest to get into the business of predicting the future. Just don't do it. 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 So, roll with the punches, trade the setups. Hey, if you see a bullish market, no reason why you can't throw some money at it. You can, go the low risk route. Don't put more than 5% of your stake into any one idea. And I'd even say that's a progressive, maybe like 2 or 3%. Nice, simple, low risk. And you can just own it. And if it goes down, so what? You can take the Joe 6-pack approach. Of course, all you level 1ers, you're doing that right now. Level 2ers, level 3ers, and alumni. Of course, you already know this. Just cut your losses at 50% loss. What is the coin right now? It's 36 G's. If we lose, what is that, 16, 17 G's, maybe I'll walk away from this idea. Maybe it wasn't a good idea. I wouldn't necessarily agree or recommend or suggest or do that trade, but that would be an illustration of that Joe 6-pack principle. Then, of course, if you fancy yourself a trader, and you're doing things like trading RSI, double bottom breakouts, look at all these W's. Jesus, somebody's getting bullish here, right? I don't know, 3 reasons for a trade. Look at that Litecoin. Very beautiful looking bottom coming in there. Willie, nice and stupid. You can see the W's trying to form here. Maybe you're a bull. You draw your 50% rules going back up top. Zoop. Gonna gun for, what are we gonna gun for here? 266. Look at that cute little W right in there. That could easily work. You don't know. There's no guarantees. Mr. Predict the Future. I don't know what the fuck's going to happen. But I'll tell you, if Charlie goes and puts in that W there, and I'll just risk against the bottom of that W, and I'll take profits at 50%. Well, that's a 2.43 risk reward. Even if that only works half of the time. Coin toss. A coin toss. You not even right more than 50% of the time. If you keep taking trades at 2.43 risk reward on setups and you're wrong 50% of the time, you still actually are profitable. And ironically enough, actually not terribly unprofitable. Like actually quite profitable. you get up into like 60, and ironically enough, I mean, I don't know how long you've been watching these videos, but M's and W's, they work about 60-70% of the time. Maybe you took this bearish M and it fails. Well, that might be one of those 30-40% of the times that they don't work. Ironically enough, what I see here is I see a war of the bulls and the bears. So here are the bears. Whoops. Here are the bears as we speak, right? Up, down, up. Ooh, we went through that low. They're not very strong. They're pretty weak. But nonetheless, there are the bears. We'll color them red. There they are. They're active. And now I could even see just down in here, the bulls are like, nah, you know what? Screw you. It hasn't fired yet. But if that fires, well, the bulls have got a case. I mean, you don't know what's going to happen. Really, all you are is a statistician. This is what kills a lot of people, especially, social media. Future predictors, all that kind of stuff is when you say something like, you just don't know what the fuck's going to happen. People hate when you say that. So, I think it was interesting. I posted in the lounge this morning. Yeah, so somebody's there. Sunday BTC party. Not a bad looking. Who can tell me? It'd actually be interesting to see what David would call this. But what does that kind of look like? To me, kind of looks like, but I think this is actually like an atom to him. But I kind of see a head and shoulders like that. There. So actually you could just draw that distance. Clone that. And your target should be right there. So we're coming up on that target pretty soon. And if anything, this looks like, and then we went after the stops. They're going to go after all these stops. That's what they're going after right now. In fact, what you probably should see is keep your eyes peeled. Anybody like watching on YouTube and stuff, keep your eyes peeled for the, the BitMEX liquidation tweets and stuff like that. You should probably start to see those things flying as we come up against this M top here. We're probably going to see a bunch of stops tripped up. Actually, there's a guy in our day trading group, Thomas out of Vietnam, and he likes to buy on a stop. I guess, I don't know whether maybe he would be here, where he kind of thinks that there's going to be a bunch of stop loss orders. So he's going to buy on that, hoping that all those stop loss orders trip up. And there's a bunch of levels in there, so I think that makes sense. That you could actually see this thing pop pretty hard on that event. And then, of course, the guys who are running it, that's exactly what they want. Then they want to see that sort of cascades, that all of those stop loss orders, they become buys, right? They push the market up, they push them up into this level, and all of these stop loss orders trip up, and all fucking hell breaks loose. I think that's actually a textbook term taught in the MIT cryptocurrency course. And then all hell breaks loose. No? No one? Anyway. You might even argue that actually this might even be a nice little bot setup. So, but I should get to the questions. So let me just draw this out just so anybody on YouTube, especially people that watch this video and go, there's no fucking value in what this guy's saying. So this is a setup that I used to trade when I actually got funded as a crude oil prop trader. So it works. You use the information as you please. Let's see. I guess we're going to reverse that. So what I would do is I would draw sort of an A-B kind of move. And then I would ask, well, what would a CD, sort of harmonic trend continuation, look like? And if that's the case, boom, 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 then I'm going to break this move into quarters. And by doing so, what I'm really doing is I'm creating a risk 1/4 window and reward 3/4 window. And actually, it's kind of cool. You can even see the W basically is that 25 level. Notice how the market came up and then back down against this low. Look at the fight that went on there yesterday. And look at that cute little W and RSI. That would have been a wicked entry right there. Up, back up against this level, then paused and pop. So I actually think that this trade looks like it's on. All right, interesting how that's 38.2 of that entire trading range too. So usually markets like to come back to these fibs repeatedly. So what's that, about 42 Gs? Now, I wouldn't be surprised if, like we said, this was kind of a measured move. So this distance here, once we get up into that area there, whatever that is up in there. Interesting how that's basically moved stop to scratch, like we said. And then we went after the stops. If you did take this long, what you're kind of hoping for is that, like I said, all hell breaks loose on this trip up event and this thing pops violently up top here. Then you could kind of do like look left kind of thinking, where are we going to see more resistance come in? So you can see there's a bunch of these previous highs that, the people that did buy these levels, if we do get up into there, they're going to be like, oh God, thank God, get me out of here. Right? So that's there. Especially up here. Level 2ers, Deborn. I think I saw you over on YouTube, right? So horizontal support and resistance, right? What we would call tricking out your charts. We put just a ton of these levels on the chart. And if you start getting into clusters, then it's probably an area where somebody's really trying to lighten up. So just really roughly, you can clearly see there's something going on up here, right? So we go like so, and then you go boom, right? So where is that? Aha, look at that. So you can see they pop her up into the top here. You can see all these old people that were in the market. They're all going to want to try and get released respectively. And ironically enough, they'll probably run this whole range. And then once that's done, right, all the stops are all tripped up. Then we back off. That wouldn't surprise me at all. I totally think that this market is basically range bound, and I kind of think that remember Willy Woo, back in the spring was kind of like about 40,000 is probably fair value kind of thing for dips. And so what I kind of think here is we're gonna just like oscillate around this area for the next while. That's what I think's gonna happen here. So have some fun with this market. And I think that through this period, if we look at things like the dominance, you might find that Bitcoin works its way up, this W's out, and we transition back into red boxes. Red boxes are not usually kind to alts. Are we in a red box right now? I don't think so. I think if we break out through the top here on a serious push, then I think I'll switch this. Right now, I think the market's still sort of asking, okay, which way do I want to go? And I might argue that, if we do now, if this thing holds up, if we do roll over and break back below here, that's going to be a new M, and it'll probably initiate a hell of a push in alts. But right now, big sideways. Everybody, if anything, everybody in altcoin land is going, oh, fuck. Oh, fuck. Oh, shit. Oh, God. So, if anything, what you need is some sort of catalyst, somebody to say something, somebody to do something that's going to kickstart this thing. And unfortunately, I don't know whether I see it. I could also, once this move is done on the corn, keep in mind, this is a pretty small range. I could very easily see them dip the corn lower because, the stock market itself does not look happy at all here. This bearish setup, remember I told you 1, 2, 3. I mean, technically it's still working. Interesting how its stop is way up here. And it hasn't even had its move stop to scratch working or level hit yet. Here's a great example where you don't know what the fuck's going to happen. I think I said this earlier. We're getting little bullish setups that are actually going to take us up into resistance level. This setup, this bullish setup off the lower time frame might actually work, and yet the higher time frame bearish setup still just is working away. That's kind of what I think's going on here, right? Big old trading range. And this might happen in like a couple hours. Bang, 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 done. And then I don't think we're going all the way down here, though. I just don't feel it in my bones. But what the hell? I could be mistaken. I get the feeling, like Willy Woo, he was kind of saying, down in this area, this is where we want to be a buyer. I still think that that's the market that we're in here. But that might actually mean that, Bitcoin does rally. This dominance does fire, and the altcoins, they just go in the cupboard for the next while. That could very easily be the case. But having said that, especially versus US dollar, I like location. We're starting to finally come into location. So on something that actually is versus Bitcoin. This is a total piece of shit. Don't get me wrong. I'm not like touting this name. This is when I put a tweet out. I put out like one name that I like because I kind of like the Ubik people. I know a couple of the principals in there personally. I think they're good people. I believe in this story. And if anything, I like it because it didn't really get wrapped up in all that nonsense that we just saw. It's a nice rally, don't get me wrong. But when this thing's ready to go, it's going to fucking rock and roll. This isn't its market. When it is, but it's just not it today. Having said that, reload zones, oh boy, here we are. I've got bids working down here. I'm more than happy to be a buyer. But, something like that, as I said earlier, this is the only business when stuff goes on sale, nobody wants to buy. So there's the kind of thing where, I wouldn't say that you have a technical buy signal, but I would definitely say you're in damn attractive trade location. Nanny nibbles, right? Maybe you go like 0.5%, 1%, right? Maybe buy over like 6-8 month period of time. Keep it simple, fine. I like Graham. He'll be teaching the level oneers that he has like a grading system of his setups, and as setups come in and get better and better looking, right now we have okay trade location. It's not great. We might dip all the way against this trend line in 88.6, and he goes, "Oh fuck me, I love that that's my initial purchase, puke out, panic dump, 0.5%." Then, all right, the market actually puts in now a bullish momentum divergence on it, maybe like a momentum indicator that he likes to follow. And it's breaking out to the bull side when this thing is breaking to new lows. So at this point, on the confirmation of the divergence, he goes and adds another 0.5%. Then, a month or two goes by, the lows hold. So he's up to like 1% into this thing now, but month or two goes by, the lows hold, and in comes the W. So then he adds another, I don't know, maybe the RSI or MACD or histogram or whatever looks like that, and he adds another. I don't know, at this point he goes, I love W's with confirmed divergences at trade location. I'm going to put on 1 full percent when I see that. So now he's up to 2% invested. Very typical scenario. That's the way I would sort of approach the market over this next month or two. Could you see Bitcoin enjoy maybe a nice little counter trend rally back up into the 40s? Altcoins just kind of flounder here. This is just one example. Absolutely. Wouldn't surprise me at all. How about the popular DeFi space? Well, boy, you guys are not going to like this. There's your trend line. This is the worst part about bull markets, right? They say too far, too fast. And we go up here, and I say to people, well, where reload zones are, where original Wyckoff check market structure is. And they go, you're fucking insane, man. It'll never come back to there. TA is meaningless. Don't have to buy W's. Indicators are meaningless. Just get out there and FOMO buy. Uh-oh. So, I don't know what's going to happen here, but I can tell you technically that's not a pretty picture. That, my friends, is a dangerous picture. I'm not saying run for the hills, but what I am saying is I hope there's like fundamental value in whatever it is that you bought. This is why it's so important, especially in this venture capital space, to try and figure out what the fuck value is. Because you can get so easily swept up in a sort of mania. I mean, it happened to me. I'm not going to say I'm immune to it. It happens to everybody. You know, and the worst part about it is at the top of the market, and thank heavens this go round I had fun with it. You know, Sedona euphoria. If anything, I like that. Next time I feel as though there's some crazy ass fucking nutso market is happening, I'm gonna change my name. Well, on social media to some silly female over the top name. Maybe I'll keep Sedona. Maybe I'll use that again. And I'll make some crazy outlandish bet that if I take $500,000 from the market on some silly thing that's flying, I officially changed my name. Then that way we know that we're getting close to the end of whatever the stupidity is, and if Brian actually does change his name, well, fuck, everything went wrong. But anyway, no name changing this go round. Phew. And I get the feeling that when we got up top here, the market was just not operating on normal logic, which sucks. This is really a question of scale. But there is a gentleman, W.D. Gann, who lived forever ago. And he would say you actually measure a healthy trend line by a 45-degree angle. The only problem is, of course, it's 1 degree of price increase for 1 unit of time. This is a daily chart, which means you have to square up price and time, and I'm never really that good at it. But what I will say is... probably when that 45-degree angle there was lost, that was probably problematic. And now, if anything, we're probably going to have to do things like 45 degrees off the top. There, yeah, so you can kind of see trend lines kind of setting up that. So really, I don't think this thing's a buy until we get back above this trend line. And this might take a very, very long time to play out. That could go well on into the summer. There are probably a bunch of people, quote unquote, bag holding in here. I would even say probably in the short term, but a trend line support, so at least we found a little bit of value. It'd be interesting to see if that's any kind of fib or anything. Boom. 61.8. Well, there you go. So if you had balls of mountain man balls, trend line tags, it's tough to take a trade on a trend line tag. I don't really like that strategy, but others can do it. So something along these lines. I would be thinking like reload zones going the other direction now. So up in this area. But if anything, I like the idea. Let's bring this thing back down to earth. Like a logarithmic. And we'll go boom, boom. And then I have to eyeball this, which is a pain in the butt. But there to there, there to there. So that takes us down into there, roughly. Yeah. It's about the same size, eh? Sucks how you can't do this mathematically. Anyway, something like that. So, down into 88 point... Oh, it's so funny when you do this over time. You go, oh, gee whiz, what a coincidence. So, you notice this tail here, right? So, if anything, that's a great image. Of course, this is where, of course, the shit posters, they hate me for this kind of shit. I mean, there is a very real TA image for you, which is going to... anybody who's a bull, they're going to hate this kind of image. I don't know whether I can even use that trend by angle. But let's go like that, and then let's go like that, and then let's go like... well, I guess we'll leave it like that. Good enough. Alright, so, boom, 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 boom. Wyckoff check. even, well below the 78.6. What probably happens here is we go right, and then something like that. And of course, Brian, got to see that W on the other side of this trend line. So that's that. For Mr. Future Predictor, the guy who loves me making future predictions, that's my future prediction. And of course, it's completely meaningless. It doesn't mean anything. It's just Brian having fun with squiggly lines. Now, if the market does happen to come down into this area, then, hey, I'm going to start paying attention. We get the Wyckoff checks. I'm going to start paying attention. We got bullish divergences that start coming in. Because keep in mind, this is a log scale, right? In regular scale, it's going to look like that, right? The kids are going to be dying 1,000 deaths here. And then, divergences, W's coming in. There's probably going to be a pretty respectable trade to the upside. And if this high here is broken, well, then this A, B, C, D kind of thinking, it's off the table. As simple as that. It's not really rocket science. And that sort of forecast prediction is off the table. It's not really, I think I'll just leave it at that. So, all right, let's, Kevin, maybe, did you PM me? Is that what you did? Nope. Oh, is Kevin here? Maybe, did you put in the lounge? Maybe you put in the lounge. To complement your bot on the corn, Brian Beamish, Stevens harmonic targets probably line up with what you're seeing. Oh, okay. Oh, there he is. Oh, hey, Kevin. All right. Boom, boom. Okay, where the hell are we? What time is it? All right, I got about 45 minutes. I gotta be out of here. Somebody wants to. Oh, he never did go into that. Hey, Kevin, can you remind me if you want, or anybody on the side, can you remind me to cover this in the daily brief? I seem to remember we were gonna do this, and then I said I was gonna do it, and then I never got around to it. I haven't looked at these damn pi cycles in a while. God, so much homework. The worst part about being like this kind of trader here is, this is a lot of work to put this together. So I got a lot of fucking work ahead of me to get my head wrapped around that and the current market cycle and which one's active. But they're good charts when you do them up, so what the hell. Okay, it is the 13th here today. Maybe there was no questions. Oh, Jesus Christ. Oh, boy. No, I'm going to be busy. All right, so let's get going here. Regarding the recent correction in the crypto market, if your stops weren't hit or you had crypto in your wallet and not on the exchanges and didn't get a chance to sell in time, would you still hold at that point or try to sell or move to stables? Oh boy. Actually, stables there I think is the key to this. Have you ever heard me, whoever asked this question, who asked, doesn't say who asked this. Anyway, I'll come back to this in a moment. So, assuming we have another potential leg down or discussed, would it make sense to hold for another correction or move to stables to preserve capital? Not asking for financial advice, but more so strategies available at this point. Thanks. Yeah. Well, like I said, the key is their stables. And the reason why I say that is anybody who comes to me after a market is broken, and the line has been exactly the same in crypto since day one. You're kind of asking me, we're standing there outside of a barn. Barn doors behind us are flapping away in the wind. It's very windy and you can hear them, the shutters back and forth. The door is, of course, wide open. And we're standing there and we're watching, a few horses trotting off into the distance, free and very happy, and they're gone. And you're asking me, Brian, should I close the barn door last night? What do you think? So, unfortunately, of course, hindsight's always 20/20. And the irony of it all is that remember, I've been at this game a very, very long time. And the response and the answer, like, this is why I kind of find it amusing that this guy's going off on YouTube. Doing the total negative FUD, just fucking pound the table over the top. I mean, I've seen this so many times before. It's ridiculous. The worst part about this is usually this ends with people committing suicide. Very sad. So I don't know whether we have to go through that this cycle or whether they've hit some sort of short-term bottom. Keep in mind, I think that the politicians are heavily motivated to they're going to be heavily motivated by the capitalists like Joey Diamond and stuff to vote for more stimulus and more U.S. debt. So the only way to motivate those politicians is to really inject some serious FUD, like this dickhead was doing here earlier. And I think we're going to see more and more and more of this over the next couple of weeks. It's going to get pretty palatable, people. And it kind of sucks because I think this was a Jupiter-Saturn cross event exactly this time last year. And I think it was exactly this time last year that guy was running around on the Washington State Freeway like lighting fires and nobody said boo. And isn't this about the time that all that happened in Minnesota? Is that about that same time? Can't remember. Or was that before? Oh, not interesting. So I actually don't have the best of odds to actually help you with an answer here. Like I said, I've been doing this a long time. I actually, but when I was a broker, just for fun, we kind of figured it out just so we'd have a quick line to say to people. I actually only have about a 33% chance to actually give you information that you're stating here. That at the end of this, you're going to go, oh, thanks, Brian. Oh, man, that was the best information. That was totally saved me. 33% chance. Ugh, horrible odds. And so, like my old boss, when I first started, a guy named Dave Blair, he would just say, look, you're going to bring your account to me. I'm selling everything, and these are the products I'm going to put you in. Clean slate. I don't even give a shit what you bought beforehand. It was wrong. We try to tell all the level 1ers to, when they begin the class, put yourself into a square position. Don't put yourself into a position, where you are going to be looking out of the corner of your eye at the screen, maybe even losing sleep, and you're not even going to get the value out of the course that you're supposed to get because you're not going to be paying attention. You're going to be looking at the damn screen. See that happen a lot. Man, I remember one guy who fucking panic sold into that Mike Hearn Rage Quit. No, actually, I think it was a little bit earlier than that. It was he sold into the November 2014 lows. Total panic, total emotion, and I'm seeing exactly that same behavior happening now. And like 6-8 months later, the guy's like, oh, fuck, I can't believe I totally sold the bomb. This Beavish guy's a total crook. And we're all going, dude, you were fucking acting super emotional. You had no business in risking in the market. I mean, a lot of those Bitcoiners back then, that was when Bitcoin went back down around $100, right? And they were pretty choked after it being up over 1,000, and they thought, fucking man, they were made in the shade. And it went all the way back down below 200, and their dreams were all over, which is so sad. But anyway, the point of the matter here is I've seen this so many times. I mean, I can't tell you how many times I've seen this in my career. Don't get sucked into this nonsense. These people are working you. You know, if you just go and buy your Bitcoin, bought and paid for, put it on a cold storage device, take it off of the exchange, and just bury it in the backyard. I mean, that's, to me, I don't have a problem with that at all. But, I mean, where did you buy? Why did you buy? Did you chase? Was it a shitty location? Was it, FOMO, all that kind of stuff? Well, maybe you're going to have to really learn a hard lesson. I know a lot. The good part about Bitcoin is it's a rise-only market. Just hold it long enough, and it's pretty much guaranteed to be higher in price. And that's exactly what Satoshi Nakamoto wanted, because he could pretty much guarantee that fiat currency is going to be diluted. They go hand in hand. It's perfect. It's a great story. It works well. So, the people that bought $17,000, $18,000, $19,000, if they just did nothing, then they were perfectly fine. Obviously people who bought shitcoins. Do you want to buy some shitcoins? They're called shitcoins for a reason, people. And if you're in there speculating in a shitcoin and it doesn't do anything, well, I think I would say probably a third of the shit that I bought that last cycle, Trex kicked off their exchange and they just disappeared. A third of the shit actually completely vanished. That is so perfectly cryptocurrency. So, what do you do? I mean, if you broke Brian's 5% rule, well, then you got to man up. Or lady up. Whatever the case may be. I can't comment on tax implications and whether you like fiat or whether you can even go into fiat and what are the relative risks of various stable coins. Can't really comment on that. I played the stable coin game last go round. They're super volatile. Somebody can sneeze and they can lose 10, 20% of their value. If you've got hundreds of thousands of dollars in them, that can be very painful experience to have to go through. And I don't like that kind of shit. So I'm not really a big fan of that. But at the same time, too, I understand crypto people are crypto people. So, maybe do like a basket of the stables. You don't necessarily have to be in one of them. Maybe pick like a basket of them. Also, too, probably, not a bad idea to be diversified amongst the different stables. So, I don't know, is there a Euro stable coin? Does that even exist? It might be a bit dangerous that the market is getting so heavily saturated with US dollar stable coins. That might actually be a bit of a dangerous sort of Achilles heel of the space. Does anybody know? Are there any Euro stable coins? I love this DeFi opportunity to entry in good projects at very interesting levels. Yeah. So look at that. This is a great testament of TRI. So the TRI members go, like Fred goes, yep, if that happens, I'll be fucking loading up the boat. I mean, that's perfect. That's the chart I just drove you, right? And, how typical TRI, right? Fred's here like, I love the DeFi opportunity. And this guy, he's a fucking player. So, I'm not going to leave him on the screen too much here. You got to see an actual player there, people. But is there a Euro stable coin? Because that's interesting. All right, so, honestly, I don't like even trying to answer this question because it's dangerous. I got basically a 66% chance of giving you an answer that you're not going to like. So, what I will say is that it's not in your best interest to hold too many eggs in one basket. It's not in your best interest to sit on a losing trade for too long and just nurse the bad trade. And if you're down 50%, sit there for the next 5 years having to watch a position that's down 50%, it can get quite debilitating. It's not really, actually, Grim even talked about it today in class, and I don't really have it in the program, but I was super pleased to hear him say it. But it's not really in your best interest to be too concentrated in one particular sector. And people in crypto really learned that the hard way in 2017, right? Where they thought crypto and altcoins were the future and here to stay. And then, of course, volatility only works on the way up and there is no downside volatility. Uh-oh. And if you were too concentrated in crypto and you thought you were a millionaire, well, that changed very quickly. So, those are general rules of thumb. Now that the horses have left the barn, what do you do? Maybe consider thinking about using rallies to exit positions, which is going to take an immense amount of patience and discipline. Depending on how underwater you are, maybe think about averaging down. That might be an idea. I know a lot of people that did that. I would probably wait for, okay, we're really rocking and rolling bullish here. Everybody's awesome. Things are moving, right? Before you start getting too heavy back on the buy side if you're underwater. So, those are some of the things that I might suggest. Tough one to help you there, bud. And I've had that question lots. It's not an easy question to try and answer. And really, the bottom line here is I don't know what kind of money you're working with, but it might be a good idea to actually sit down with a financial planner. Go through things like asset allocation. Am I too heavily concentrated in crypto? Have I taken too big of a bite? Maybe I've made a lot of money in crypto, and maybe it's a good idea to maybe diversify and lock in some of those profits. So, those are some thoughts as well. All right, number 2. Hello, Brian. In one of your last BCS, you mentioned that buying on the top of BTC is not advised because the greatest fool theory does not work here. Well, it does. I mean, it does until it doesn't. That's the way capitalism works. And that's what kills you in a bull market, right? Is that nobody talks greater fool theory. They just talk bull market and how fucking wonderful the asset is. Then when the markets break, people go, oh yeah, greater fool theory. Yeah, that explains everything. It drives you nuts. So based on that, can we say that in crypto in general, because those coins are not revenue generators, we always need to base our entries in RZs? Having in mind that because the theory does not work here, basically the crypto market will be moving in cycles. Is that right? Thank you, Nicholas. Well, as I said there just a moment ago, I think the greater fool theory here works even more so. It is cryptocurrencies are a commodity. I sort of started the rant off today with that sort of theme. So understand, you're getting involved in commodities, man, they can get bid up to insane levels and then come crashing back down to value really quickly. I think actually you might even see that happen in the lumber business here. Lumber by nature is an insanely volatile asset. When I was a commodities broker, we would always advise people, stay the fuck away from that lumber market. You're going to get your ass handed to you. Anyway, our lumber analyst at this one brokerage house I worked with, man, he was this gnarly old fucking dude. He smoked like 2-3 packs of cigarettes a day. He was right off the fucking the patch out there in the bush. I can't remember what his name was. Man, he was a character. And he was fucking crusty as hell. Hey, how's it going? I can't remember what his name was. Anyway, you'd say hey to him. He'd be like, well, whatever. Fuck off. Those lumber traders. They're there now. The lumber traders and the silver traders. And it's interesting because they're kind of this, they can call them the soft commodities. I was joking with somebody on this channel, and actually they showed me a really cool... actually, it was Mr. Great, right? Mr. Great, he was going to hook up Mr. Dickhead there and try and teach him how to trade. for free so he doesn't feel like he's getting some fucking shill here. Mr. Great said that he really liked that Trading Places movie, which is a fantastic movie about the frozen concentrated orange juice market. And the guy who did that movie actually did a really cool piece on the IRS and how technically it's actually not really a law for Americans to actually file taxes. And in Canada, it's the same way. It's so bizarre, and I'm not quite sure why the banksters have done this, but there's probably a very specific reason that we just don't understand. But in Canada, it's not illegal to not file a return. But if you owe taxes and you don't pay the taxes, then that's breaking the law. Which is, I don't quite understand the mechanics of it, but it's along that same video. So Mr. Great, you're going to help that guy and then maybe also show him how the tax code is set up in the States. But interestingly enough, it's similar in Canada. I always found that very odd, that it's not illegal in Canada to not file a return. But it is illegal that if you do owe taxes, that if you don't pay them, you're breaking the law. So go figure. Okay, where was I? So I do believe that Bitcoin and crypto is very subject to greater fool theory. Absolutely. If anything, what I'm worried about is why is Doge the price that it is? There's no reason for it. Actually, it's interesting. Somebody even just posted a tweet by Mr. Musk here. This is inaccurate. Tesla only sold 10% of holdings to confirm BTC could be liquidated easily without moving market. When there's confirmations of reasonable, less than 50% clean energy used by miners with positive future trends, Tesla will resume allowing Bitcoin transactions. Oh, thank you, Mr. Musk. Appreciate it. I suppose that's going to catch a bid in the market. So I would argue that really Doges are worthless. I think our rule is that Doge is a buy less than 40 sats, which is basically worthless, right? So why is Doge where it is? I would say it's totally greater fool theory. Totally, without a shadow of a doubt. RZs, I would assume that means reload zones. Really, that's just a reference to trade location. Anytime we take a risk in the marketplace, I think, Farmer Dave, aren't you here? Didn't you do a presentation? I think I saw Farmer Dave here. Let's see. I think he was here earlier. That's too bad he's not here now. He did a presentation on the site about DeFi and trading DeFi, and his rule was, don't go and do one of these things unless it's in reload zone, which I thought was so cool. What a perfect analogy, right? Just pull up your price chart, throw on reload zone, screen boxes. As soon as the assets in the reload zone start doing your DeFi thing, right? Because that way at least you're not chasing up markets. So that's just like a general principle of life. I got to get you thinking, and I think what's going on, especially with Mr. Dickhead there earlier on the YouTube feed, what I think's going on here is the 1%, the institutions, they're programming the public to freak out. They're programming the public to sell at the bottom. And what I'm trying to teach you is to think like an institutional investor. You have to program yourself to buy in reload zones, or even, at or below. Below is even better. But you have to buy down here. Not sell, buy. So that's all about sort of reload zones. That's a principle, whatever asset you're thinking about. Not going to agree with that greater fool theory here. Sorry. So I hope that helps that sort of conversation. If anything, I would say crypto's even more greater fool theory. Okay, what do we got here? Got a chart, got Bitcoin volatility token. All right, versus USD stable token. Okay. BVOL USD. Suppose, Kevin, what do you think? I think Kevin's here. I think, Kevin, would you see a bullish momentum divergence in this chart? I think I see that. I don't know whether I really see a hell of a lot else, though. Looks like there's some serious resistance. Yeah, all right. Ewald sees that. Is Kevin here? Yeah. Anyway, Kevin and I, we do the daily briefs. I always like to get him to confirm his MACD bullish divs. So when I saw that, I was like, oh, that's so Kevin. Don't really see a hell of a lot else. I mean, that's kind of a V bottom. You can actually see the M top up here. Down we go. Lower highs and lower lows. So, it's like a dead cat bounce off of the bottom. This is probably like 38.2 of this range. You really have to just sort of wait to see which way this market wants to go from here. So, is this how should one analyze Bitcoin volatility? Symbol chart. Well, this is, I guess, Bitcoin volatility token. So, I don't know what the hell that means. Does that actually follow a volatility index? Well, technically, volatility index should be measured off of options prices. So, is this one of these things? There was a volatility index going around in Bitcoin that was not based on volatility. Like, if you look at something like the VIX index, it's based on the implied volatility premiums of options. But if you looked at the volatility index on Bitcoin, it was based on historical volatility, and that's not the same thing. So I don't know what this is based on. I'd have to, I'm from Missouri, so I'd have to show me what the hell this is. Maybe if you're on the site, we could talk about this in the daily brief tomorrow kind of thing. Really pick this apart, because I'm not quite sure exactly what I'm looking at here. Having said that, that chart sort of, could go either up, bull A, B, C, D, or it could M out, head down, break to new lows. There's not really a trade or anything there. It could do anything. Okay, it seems like it's been going down since 2020. Is this because of institutional involvement, people becoming complacent, or something else? And how do we use this data for trading crypto markets? I know the stock market, there's a volatility index for CBOE that people use depending on their risk appetite. How do crypto traders use the Bitcoin volatility index? So as I kind of said, and that's a perfectly good question. It lines nicely with the risk management module that we're doing this week. I don't know whether I actually believe this. I don't know what it is that I'm looking at here. How would I use it? I would say that it looks like in January, whatever this index is, it topped out at about 2,500. So, historically, if this was an accurate Bitcoin or an accurate volatility index, and I was believing what I'm seeing, I would say that that's actually probably a buy signal in your market, whatever that is, and that's like the middle of January. And as volatility has come out of the market, this was your bull market. And then as the market bottom started moving back up, this is your sort of sell signal down in here somewhere. So it's interesting how I was barking about bullish momentum divergences. We got you a week or two ago to see market structure signals and things like RSI. So hopefully you see that W there, and you see all these W's down here. And again, you see that divergence message. Market was making lower lows, but the indicator was making higher lows. So the really sharp traders there at the very end of April, beginning of May, would have seen that little W here, which sort of corresponds to that breakout there, that big candle right in there, and that would have been a bullish indication for them. Could you have used this in conjunction in your trading plan? Well, if I get a W in RSI and bullish chart breakout, which I don't really have there, but let's assume that this was a pretty W. I'm going to go and sell some Bitcoins and I'll buy the Bitcoins back when this thing ends out. You could do that. I like the intermarket analysis relationships a lot to frame trades. And actually the level 3 students right now, we actually are in studying options and options data in particular. And we are going through that process of we're going to find a setup. Maybe you were hunting a top in Bitcoin up in the 60,000 area. And you saw the technical top come in, and then you just look over at this index, and technically, if this is Wing and it's bullish, then that's bearish of the Bitcoin chart or price. And sure enough, I think Bitcoin's come off here a bit. And as it stands right now, market's sort of deciding, do I want to continue heading higher, A, B, C, D, which would mean Bitcoin's heading lower, or do I want to M out, which means that Bitcoin's going to go back into sort of bull phase. I don't know whether there's really a signal here, but I definitely think that this confirmed bullish divergence in price momentum did give you a little hint. Down in here, you could have done like level 2ers. They use trend lines. You could have drawn market structure trend lines here, and on any kind of W on the other side of these trend lines, which is kind of down in this area, I think you would have gotten a little bit of a buy signal. And like I said, momentum-wise, you got cute little W's there. I mean, that's good anecdotal information. And this thing just moves the exact opposite of whatever Bitcoin does. So I do hope that helps. It's not a bad thinking. I like the direction that you're heading in. And as you move through the course, of course, we're going to give you, it'd be interesting to study that on Willie and see if Williams percentage R gave you overbought, oversold readings. You could also add that into your analysis. And that's a really, really good example of intermarket analysis. Nothing wrong with adding that to your analysis process whatsoever. All right, number 4. This week we studied risk management, and I would like to know if there are risks linked to over-diversification, especially when it comes to an asset like crypto where all coins are positive correlated. You're telling me. Does it make sense to have a diversified portfolio of 350 coins given that they all sunk or bump at the same time? Aisha. So number 1, they done studies of this, and if you own more than 20 assets, buy and hold, then it's actually almost impossible for you to statistically outperform a major broader index. Why? Well, I think it's somewhere around 15 names. The statistical relevance of one asset moving in that basket starts getting filtered out. And then once you get up to like 20, 25 kind of names, it's the relative. You could be the best stock picker in the world, but there will be dogs in your stocks. And if you just buy and hold, it's weird how it's very difficult to outperform the broader like S&P 500. So, a lot of institutional players, they actually buy the S&P 100. And it's a nice friendly basket of institutional assets. And that's basically what the institutions use, is they use 100 of the biggest stocks. So you don't necessarily have to go to the S&P 500. Russell 2000, that's 2,000 stocks. New York Stock Exchange Composite, geez, that's, thousands if I'm not mistaken. And interestingly enough, the statistical variance between the various different exchanges, not really that much. S&P 100, S&P 500, Dow 30. Statistical variation, it's not that, it's really, like within 5% kind of thing annually. The difference comes when you are active in your portfolio management. So if, and it's a big if, but if you can, continually work your sort of sell half on double orders and then have like multiple sell half on double orders. So if a name just goes absolutely insane, you're ringing the register the whole way up. then I think it's doable. But keep in mind, 350 coins, yeah, you're right, that's a fucking shitload of work. I think I got like 250 or so on Trex. And literally every single day I got to just check out, okay, where's prices. I always do like sort of the percentage movers. Then if I see somebody moving, then I got to go back and check the spreadsheet and see where I bought the thing and if it's doubled price. And it can be literally a full-time job. So I'm not going to sugarcoat it. I'm not going to say it's easy. But if you are active and you are actively running your book of business, then I think you can outperform. And especially when up markets, right? You're cashing in, just like what we went through there. Cashing in. I think I took like over $100,000 out of that rally there. 100 fucking G's. I mean, 100 G's is 100 G's is 100 G's. And, you know, if Doge goes back down below 20 cents, I'll go and buy it back, you know. The stable coins that I sold at like 2, 3, 4x, they've all come back down to normal levels. Maybe I'll go buy the stable coins back. How ironic, eh? That's my reference. Remember I said stable coins earlier? You're like, oh, we're going to go into stable coins. I got one stable coin that went up like 8x this rally. What the fuck's going on there? So you're going to go buy that? Thinking it's a stable coin, then it goes right back down, and you're like, what the fuck? I just lost 80% of my investment in a stable coin. Welcome to crypto. Anyway, so hopefully that helps answer your question. Passively, if you just bought and hold and didn't think about it, yeah, it'd be almost impossible for you to outperform. If, however, you're an active manager and you're buying against the lows, reloading, multiple cars, you're working your open orders, you're diligent, you're working your book, I think you can do pretty well, but it's a lot of work. All right, Brian, number 5. Brian mentioned in the fundamentals section he expected Amazon to split. Price was around 766, but they never split, and now the price is much higher. Any idea why he expected a split back then, and what the advantage and disadvantage of splitting? Frankly speaking, I'm surprised that these stocks have not split. Not quite sure what it is about Bezos. I mean, obviously, I don't know whether Bezos is got a controlling stake in Amazon, or it's just, you know, a large stake. But, you know, $3,300 a share, I remember in years gone by they wouldn't. I guess the only thing is that they're probably thinking, you know, we really don't want this thing to go over 1 billion shares. So, frankly speaking, I'm surprised that the stock is this expensive. It's not normal. In fact, even... you know, a while ago, it was super popular to follow Berkshire Hathaway. Now, their stock, 430,000 a share. Interesting shares outstanding. There's only 1.5 million shares outstanding, eh? I mean, damn, that's pristine. So, why Buffett said, you know, screw it. I'm going to keep the stock price really low, but the share price is going to go through the roof. I think it was definitely by his sort of personal direction. Maybe Bezos kind of same thing. You know, I don't want the shares outstanding to get too crazy. Maybe he wants to keep them under 500 million. But I would say it's not in his best interest to like have a diverse, you know, share ownership. Because I mean, let's face it, who can afford to buy this? The public's not buying this. This has got to be owned primarily by institutions. There's not. I mean, hell, public could just one share is $3,500. You know, typical. You know, 7.5 billion shares, $250 a share. So you know, that's probably what I would have expected out of Bezos. But maybe he's like, you know, I don't want the stock to be in the billions of shares. Ironically enough, I'd actually say Microsoft here with 7.5 billion, but trading at 35 times earnings, is actually a little bit, believe it or not, it's actually a little safer, right? Because he's trading at 63 times earnings. even though he has far, far fewer shares outstanding. So it's not like the shares outstanding are going to make or break, but frankly speaking, I guess it's just purely opinion. Remember, Brian's opinion, it's just his opinion. 35-year veteran, obviously this opinion was wrong. There ain't no split there. And like I said, it'd be just interesting to see if Bezos owns a controlling interest, and maybe that's why he just doesn't want to split the stock. Because usually stocks, they don't like to have them this expensive. I actually found this a bit odd about this cycle where a lot of these stocks did. I mean, didn't Mr. Dickhead just split his stock? Right? Didn't he just go ahead and do a split? So now he has twice as many shares as Bezos. Look at that PE ratio. Holy shit, Muslim. I think he just split his stock. I seem to remember there was a split here. So usually that's what these guys do. So anyway. That's a little bit of a surprise that Amazon hasn't. So I don't know whether that helps answer your question or not. Any idea why he's expecting? Well, usually they don't like to have their stocks too expensive because then the public can't afford to buy them. What are the advantages? The advantages you can have a much more diverse shareholder base. I mean, now one share of Amazon. Now they're talking about doing fractional shares, so maybe that's why he doesn't want to split his stock, is he wants to get you all to buy a fractional share, which to me doesn't make any sense at all because there's going to be no ownership representation of a fractional share. Can't imagine you can vote a half a share or like a tenth of a share. It's always more advantageous to have less shares outstanding in the marketplace than more shares outstanding. So kind of like what you saw with Buffett. If you control the stock and you have a solid earnings stream, a lot of companies will just simply buy their stock back to reduce the amount of shares outstanding in the marketplace. So maybe that's another reason why Bezos really doesn't want to get going, is actually he would prefer to buy the stock back in the marketplace with any excess money rather than split the stock and let it be more accessible to more investors. He actually sees it's more valuable for them just to leave the stock exactly the way it is. Yeah, well, penny stocks sure can pop, eh? Actually, a bunch of crypto penny stocks sure look ripe. I got a feeling they're going to be fortunes made here this summer. So get ready, folks. All right. I don't know whether that helped. Hopefully that helped whoever asked the question. If you have entered the greed cycle already, as prices have already started rising sharply, what do you expect of the property prices in the duration of this new cycle? Well, what I see is that the whole Fibonacci is built on the mortgage industry. I believe that there will be further financial asset crises down the road. In fact, actually, I think there's one brewing here in Canada right now. I'm looking right across the street at one that I wouldn't be surprised if this property, if the market goes the way I think it is, I wouldn't be surprised if this development, part of it goes into bankruptcy. It wouldn't surprise me at all. There was one lot on the downtown corridor street of Vancouver, literally the main street of Vancouver, and this lot sat with a half-built building on it for like 25 years. The building just sat there. So, I guess the way I look at it is, I wouldn't be surprised if there's a lot of money that could be trapped up here. But that'll only happen if the mortgage market breaks and interest rates go up dramatically. I wouldn't be surprised if there is a break in the market, because the Fed's already saying they're tapering. They're going to start reducing their purchases, and that's going to send long-term interest rates up. Jupiter Saturn cross, I think, was the pivot for interest rates. So now that's behind us. I think we got basically 20 years of kind of not really rocketing higher interest rates, but the trend for the cost of borrowing should be rising. At the same time, too, I think that the central planners will actually let that cost of borrowing rise, but at a graduated rate, not at the rate that the market wants. And so as a result, that's going to put price pressure on commodities and, housing, and sort of as they increase the debt and the money supply, it's like, Bitcoin's going to be, it's like 50,000 now, or 40 or 30 or whatever it is. No reason why it can't be 500,000. Got to keep these mortgages and this housing industry afloat. So, loaf of bread's like $20, $30. It's really the value of money that's falling, not the relative value of the asset itself. These silly condos are probably going to be like $500,000 a piece, but money's worthless. Does it really matter what they're worth? Did see a really interesting comment coming out of the G7. I think that they're going to ramp up their spending programs, right? Again, sort of that reflation. Man, this is so perfectly orchestrated by the banks. They pulled it off. All of the G7 people, they're all now just circle jerking each other. And the plan is we're going to grow greater than China now. So I wouldn't be surprised if sort of the economic tide now starts to shift over to European and American growth now. Remember, folks, we've actually been in 20 years of economic regression here, which I find hilarious. You guys don't even know what a growth world looks like. Anyway, okay, so moving on. Hopefully that helped. I don't know whether it did or not. Do you expect this to continue? It's not really like the properties themselves are going to get more valuable. It's just the value of money itself is depreciating. But at the same time, too, they have to keep that percentage rate of return increase going. So they'll keep going up in price. It's not really like the asset itself is getting more valuable. It's the money that's getting less valuable. And that's the way I look at this, what's happening right now. I don't know where you are in the world, too. I mean, this could be hugely dependent on where you are in the world. And, remember, 1987 crash, that happened right through the middle of a greed cycle. So that was a crash. Of course, the media wanted the public to freak out, right? Because, of course, they're puppets of the banks. So sell, get out. But it turns out that, of course, was a buy. So there's going to be those kind of crashes along the way. If anything, what I would say is prepare for them. And when you want to seriously do some buying, that's when you do the buying. I really like, and this actually speaks to the Hawaiian experience kind of idea. I really like the idea of going and raising some money, locking in a nice long-term interest rate down here at like 2-3%. That's what like the 10-year treasury is down in the States. You could go lock in like a 20-year mortgage, absolutely guaranteed. Nobody's going to fucking foreclose. Just nice and simple. You're going to pay people current market rate, so you're not fucking them over. Man, that's an easy no-brainer trade. So, ironically enough, I actually do. It's fascinating that this whole Hawaiian experiment thing that I've been sort of kicking around here recently has come about, because that would actually be exactly that. Anyway, we'll see how it goes. Yeah, well, I'm not going to do 0. It's not fair to go at 0. And besides, if I'm putting up 300 G's of my own money, I want a nice rate of return on my money. But if we, like if 10-year treasuries right now are 2.7%, and we just said, the deal that we do, we're going to pay 2.7%, well, I mean, that's like fair market value. You do it. And then, of course, it's the whole PMA thing. We're building our campus. So, anyway. We won't talk about that today. We'll leave that for another day. All right, so I do think we're in the greed cycle. I do think Klaus would like to try and get your assets out of your hands. I do think that it's going to be super, super volatile over the next few years. I think 2022 is very much going to be like 1942, 1862, and 1782. So if you want a reference, go back and look at those dates, what happened in the world. Try and think about the banksters and what their plan is here, and see if you can connect the dots with those years and what the banksters' plans were in those years. The correlation is shocking, folks. So, I mean, like I said, if you can lock in that long-term mortgage right now, fuck, man, I would so do it. The only problem here, I mean, I would do it for Liam here, but the only problem is that the real estate prices here in Vancouver and BC, the Lower Mainland, I mean, they're just through the roof. It's absolute insanity, and that's why I have to think about things like going to the States. And this is perfect, because this totally makes sense now. The US dollar should be the most hated currency in the world at the fear cycle apex, because they are the hegemony. And right now, the US dollar is desperately on its knees right now. And like US assets are undervalued, in my opinion. You know, like I could go and shop for a 10-acre piece of land here in BC, Lower Mainland, and it's going to cost me somewhere between $5 to $10 million. I can go get that same size piece of land in the United States for a fraction of that price. Why? I think because the international buyer who is bidding up this silly land here in BC, it's not Canadians, I can tell you that, absolutely. But the international buyer here is not buying the United States of America. Why? Well, because, past few years. I thought it was funny. I put a tweet out. The G7 nations of the world are all going right now. Oh, thank God after that fucking chaos. That was insanity. Which I find hilarious. And of course, all the right-wing people in the States are like, fuck you, man. And hey, I don't think we're done with Mr. Trump. Wouldn't that be the biggest sort of twist of fate that, the international community, all this crazy insanity that's going on here in Canada and stuff, it unwinds because, okay, Mr. Biden's back and we're all friends with the United States again. And, U.S. land prices in 4 or 5 years are back up around comparable to Canadian price. The fluff comes out of this nonsense, right? And then here comes Mr. Trump just to fuck everybody over. And he gets reelected, so he's in there for like 8 years. And he's like 95 years old and he just won't die. It's crazy. Oh well. So anyway, I really like buying U.S. assets right now because the world hates the U.S. right now. Now, I think they're starting to warm back up. How long is it going to take? I did find it interesting that G7 meeting, they specifically said they are going to concentrate on China and cracking down on China. Now, when you have a big organization like that, actually in their communique specifically point out a country and say, we're going to crack down on this, that's huge. So I got a funny feeling that's going to be sort of the theme over the next few years is let's all shit on China. That's what I think's coming, folks. And then, of course, China's going to be like, fuck you. I'm the one doing the shitting here, folks. Anyway, moving on. All right, so I don't know if that helps. Rant. What time is it? 12:30. I got to wind this up here soon. All right, number 7. How many % of the options market do you think are using options as insurance for their trades as opposed to actually just trading the options? I wonder because I'm still not completely sure how I should interpret the CPC chart. CPC, is that the call put ratio? I would say that, it really all depends on what dated options you're looking at. If you're looking at longer term options, actually it's funny because the level 3ers, they're just doing this right now. There's actually a very specific term that the institutional players use called leaps. And they love using leaps. And they use leaps in size. Big, 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 big numbers. At the same time, too, there are many, like hedge fund, index funds, right, that just simply use the options market to offset risk. And they have no choice, especially like the hedging industry. So, I don't know. I'd say the small speculator is still a small participant. Jockey. When you get to the level 2 program, if you can get that far, we're going to explore the futures industry, and we'll look at the commitments of traders reports, and that'll give you sort of an idea. We can actually go into the commitments of traders reports and see the relative size of the different participants in the market. And the data itself will validate that small specs are still pretty small participants in the market. Primarily, markets are designed, especially like big commodity markets. To a certain degree, they've commoditized the stock market through like pension fund activity and stuff. And especially and definitely in the bond market. The market is actually built to service the commercials, and that's actually like industry, the people who actually use the commodities. And the large institutional people like Goldman Sachs, Merrill Lynch, JP Morgan, all that shit, they actually facilitate the trade for the commercial industry. And then the small speculators, that's you and I, we are the lubricant for the market. And, we often talk about levels getting tripped up like stop levels and stuff like that. And then we went after the stops. Well, that's liquidity. You could also call that lubricant. So, if anything, I'd love to see a jokey in the level 2 program. And once you look at the COT report, you'll understand how the market mechanism works a lot better. Good question, though. Hi, Brian. Fede here. Okay, today you said I was not going to like the answer to the question. How should I determine the appropriate risk for level for me? By taking 5% risk, one could be down 50% after 10 losing trades, so I wondered. How would that affect my emotions and probably my trading? I always try to keep a PMA, but I also like to imagine worst case scenarios just to be prepared or to avoid getting into those situations altogether. Yep, perfect. So my answer to you, and the reason why I said you're not going to like this, is first and foremost, Grim wants you to start off with 100 paper trades. I mean, if you're really serious and you want to get good at this, I would actually suggest you do that. Your first 10, 20 trades are going to be shit. They're going to be garbage. The charts are going to be crap. Who cares? They're paper trades. What you're really here to do is you're here to learn the process. It's going to take some muscle memory just to get to the point where you are comfortable with the process. And really in the level 3 program, when I eventually work with you, at the very start of the level 3 program, we start with a complete review of trading plans, your trading setup, your desk, what we call your workbench, daily checklists, report cards, mistake finders, demon finders, how much are my mistakes costing me finders. I mean, just a whole bunch of shit where we're kind of like, okay, you went through the level 1, you were supposed to do 100 paper trades. Then if you felt like you were ready to go, you were supposed to do the 20-20, and that's 20 paper trades of a setup with no mistakes. And then 20 1/10 account size trades. And then you can actually start getting ready to seriously take risk in the market. So Even the 21/10 account size trades, if you took 5% risk on a setup, then that's 0.5% risk on a setup. So, reason why I said I didn't like, you weren't going to like the answer is stunningly low numbers. And what I actually think is in your best interest is you put the trade on. If you feel as though you are anxious and you are worried in the trade, then you are taking too much risk. It's just that simple. You want to do well at this game, you got to be to the point where you're taking the trade and you don't even give a shit about the results. You're just like, well, I'm just taking the setup. Oh, did I win? Okay, great. Oh, did I get stopped down? Okay, shit, well, whatever. And you just have an underlying belief that your setup works and you get paid, commensurately on your wins. And, of course, you obey risk management on your stops. And you just in there taking the setups and you don't even think about the actual sort of stress of the trade because the trade size is so small. So, does that mean, like on trades, maybe you start with 0.001 BTC, where the trade is just so small you really couldn't give a fuck, and it doesn't make that big of a difference. Maybe that's where you start. Maybe you're a pretty big player. I don't know what the size of your portfolio is. Maybe the trade size is 1 Bitcoin. Because you got 1,000 Bitcoins in your stack, right? And that's 0.1 risk, and you don't even really give a fuck. But, it isn't like it's a specific dollar figure. It's more like what is the percentage of the stake that you're working with. And just remember, with that 5% rule, that is, primarily built for like portfolio management, running a book, a brokerage book, right? People... Hey, I want to get 20% return on my money, Brian, and I don't want to be looking at the screen all day, and I don't want to get calls from you. So let's just keep it really, really simple. 5%. Usually those kind of people, I wouldn't even put more than 50% of their account into the market. So that might mean they have 10 positions, all 5% of their portfolio, and the other 50% of their portfolio sitting in cash. And that's it. Boring. Don't do anything. Set your sell half on a double orders working and just let the portfolio work. Really simple. You're not allowed to really buy anything else until you actually see something win. You see that number below 10 of positions that you still have risk on? Well, then you just can't buy anything. Just sit there and do nothing. Then one doubles. Boom. Hey, look at that. Now I got 9 positions with risk on, 1 that's a risk-free position. Now my account balance is slightly above 50% cash. And I got another 5% money sitting there handed back to me, and I can go buy something. And I would just recycle that account over and over and over. So hopefully that helps answer. Like as a futures trader... my maximum risk on any one given day was like $500, and my maximum, if I broke this number, I was toast. Risk on my account at the prop firm was like $1,500. So that technically meant that about, any given point in time, I could have a drawdown of like 15-20% on that, whatever that maximum risk was. But that's crazy prop firm. And interestingly enough, very high stress. I wouldn't actually recommend that you go that route if you want relatively low stress. And, at that prop firm in particular, you really couldn't actually even, because they're futures contracts, right? You really couldn't actually put on a trade. That was so small that it was just sort of like, I'm just trading with the wind, have fun, and actually make it worthwhile. I do like at TRI with this our little day trading room. We're having a lot of fun because you can trade these micro contracts, so you can actually do very, very, very small trades. and manage risk appropriately. So that's kind of fun. It does make it enjoyable. Even like the minis and stuff, they've gotten so high priced. Like crude is like $10 a point. Typical bottom formation and crude could easily be 20 ticks. So that's like $200 a contract. So you get a bit of money very quickly. And that's not very flexible. So high stress on those prop firms, I actually think probably way too much risk per trade, and that's why a lot of people can't handle it and blow up. So I hope that helps answer the question. If you actually feel it stressed out in the trade, then you've actually got too much risk on. You got to lower the trade size. What I find really interesting is people that start with really small accounts. If you just do the process, just keep doing the fucking process, then those small accounts can turn into big accounts pretty quickly. And then all of a sudden you're like, hey, well, actually, percentage-wise, that the average bet size has moved up materially. I think like in my little demonstration account, I started with about 80 G's in the damn account's now up to about 160, 170 or so. So that literally means that I started the account, I put on like 0.5% risk on any one position and just primarily stayed in cash most of the time. So that was like $400 trades. Now, just to keep the same percentages, that's got to be like $800 trades. Which I don't like, because I don't like taking bigger bets. It kind of pisses me off, but I guess I got to do it. So. Okay, let's see what we got here. Today, so hopefully that helped to answer your question there, Fide. With the inflation at new historic levels, I don't think it is. Would it be a wise idea to lend money in the near future to buy gold BTC in order to return less later on? The whole inflation kind of thing. I don't necessarily buy into this whole runaway inflation. I think there was a short-term inflation shock because of COVID. But I don't hear any of you guys, let's do a poll on YouTube. Who's got a pay raise here recently? Did McDonald's go and give everybody raises? I don't think there are. I haven't heard a lot of people talking about getting pay raises. And that's really the inflation that the Fed's going to be worried about. Now, I do think in the next 10, 15 years that push will inevitably translate into big wage increases. But I don't think that's here now. That's going to take a good 10, 15 years to get going. So I don't really buy. Like what I buy in is this is the cost push part of the inflation cycle, where the costs of doing businesses are going up. But that's not the inflation that the Fed's worried about. They couldn't give a shit about that. What they're worried about is when workers start demanding higher wages. Because remember, workers still represent 2/3 of business costs. So, they'll say commodity prices are volatile by nature. As I've said with Bitcoin, right? Commodity prices are volatile by nature. Sometimes they go zooming up, sometimes they go zooming down. They don't give a fuck. But you can't really cut wages for workers. And once that trend starts getting going, that workers are demanding higher wages, kind of like the rise of international socialism, that's the shit that the Fed does not like. And that really makes sense, right? Does the cartel of the slave owners, does it voluntarily want to let the slaves' lives be better? I mean, it's a pretty simple answer. Nobody's going to like the answer, but it is an extremely simple answer. If the slave owners have to pay the slaves more or maybe give them a little bit better standard of living, okay, fine. But they're not going to do it voluntarily. Right. So that's really the inflation that we're all talking about. So D-Born here says, and everybody should know D-Born's my buddy. That's Derek. We're gonna all get to know you, D-Born. You're not gonna be anonymous anymore. On our Wednesday crypto show. That's if, of course, he shows up on Wednesday. We'll see if any of the three of them show up. But we had a fun little crypto show that we started up on Wednesday to look at specific cryptocurrencies. So anyway, that's that D-Born you see over there on YouTube right now. Okay, what was I going to say here? We talked about that. Okay. I don't know whether I like the gold versus Bitcoin. That's a tough one. I do like the idea of borrowing at these historically low levels of interest rates, locking that term in for the next 20, 30 years. And as the value of money falls, theoretically, you're going to get wage increases and stuff like that down the road. You're actually paying that loan back with dollars that are worth quite a bit less down the road. I do like that kind of thinking. That thinking does make sense. But the only problem with that is it is locking yourself into a long-term debt obligation. So who do you want to lock yourself into that deal with? Ironically enough, this is coming back to the TRI community. I would love to lock in that debt obligation with TRIers. Like, I would love to encourage you to take some of the crypto gains, and some people in our community have done very, very well, and lock those in, building this campus for us out in the middle of the Pacific. And I'll just pay you back those dollars over the next 10, 20 years with cash or dollars themselves that are getting less and less and less valuable over time. So I like that thinking. If you can go grab a 20, 30-year mortgage, lock in the low rates, get a nice low monthly payment for the rest of your life. If you want to play that game with the banks, I don't mind that thinking. What I'm really worried about is people go to the bank with the intention of getting that 20, 30-year mortgage, and the bank talks them out of it and gets them into some sort of 5-year variable rate mortgage that the bank has the discretion to refinance, which is exactly what happened in 2008. And a lot of good quality people basically lost their homes because they wanted to cash in on low short-term interest rates. So don't get caught in the short-term game. If you want to play the long end, okay, fine. Was this with the inflation and exchange something similar to what Michael J. Saylor is doing? What's your opinion on taking credits in the current financial environment? You're my biggest fan. All right. Well, geez, isn't that interesting? All right. JU5T1CE. Yeah, I think I'm going to leave it at that. I can't comment on Michael J. Saylor and what he's doing. I don't know what that strategy is. If you want to articulate it and we can talk about it through the daily brief and we want to replicate it on the site, totally down. If anything, I love this kind of stuff. What I think I see is somebody is volunteering. So if you are my biggest fan, then the way that you can pay me back is to become active on the site, and let's do a little case study. Come on the Daily Brief and tell us, what is Mr. Saylor doing? Exactly. What is the strategy? And would it be in our best interest to do it? And you might sell us on the idea. Okay, number 10. When using TradingView charts, what scale should we use and why? Auto, log, etc. it should be linear versus log scale. I think that's what you're talking about. And really, it's a question of what are you measuring? Where's the best way to show you this? Actually, that was this kind of stuff. Yeah, so if I'm going to be measuring the growth of the crypto network, this Bitcoin network. Hey, there you are. JU5T1CE. All right, cool. So I got a volunteer. Awesome. I love that. 1 + 1 = 3. Let's make you famous. JU5T1CE. And then Mr. Dickhead there can listen to you, and he doesn't have to bug me anymore and watch my channel. So if because Bitcoin has a fixed supply, then technically, if we want to measure the growth of this asset, then we have to use something like a logarithmic scale, where every unit of growth is actually equal on this scale. So you can actually see what the growth of this asset looks like over time. So the problem is, if you look at an asset from like a linear scale, what you're seeing here is not equal, right? So a $1 movement from down here is obviously a much, much, much bigger difference than $1 movement way up here. So you're sort of measuring apples and oranges if you're thinking about the growth of the network. If you're using dollar figures up here, they're just not the same. The easiest way to think about this is think of like a stock. If it earns $1, or let's say 1 penny a share to keep it nice and simple. So the earnings of 1 penny, if the stock is 10 cents a share, then what that means is that's 10%. Not bad. And if they go to 2 cents a share, well, just to keep everything similar, that's what is that? 10% would mean that stock has to be 20 cents, right? Just to stay relative. But what's really going on here, if we rise earnings from a penny to 2 pennies, well, that's like a 50% increase. Actually, not 50, it's 100. It's double earnings growth. But watch what happens when we grow from 0.02 to 0.03. Well, that's again, that's 1 penny. 1 penny. But now, instead of like 100% gain in earnings, now we're 50%, right? And it goes geometrically down from there, right? If we go 2 to 3, then we go 3 to 4, which is just 1 penny. Now we're like 25, and even less than that, right? Like 33, really. So what you see is that the 1 penny stays the same, but the increase or decrease in the size of the earnings is going proportionately lower at a geometric rate, right? 30% or 100%, 50%, 30%, right? So the only way that you can reflect this on an equal basis to see what the difference of 1 penny in earnings is to look at it from a logarithmic scale. So that's this. Because Bitcoin doesn't have any earnings, we're not going to really think of it that way, but think of it sort of the same way. There are fees associated with Bitcoin. The bigger the network, the more the fees. So how do you equate a fee generated here and a fee generated here as sort of the size of the network? I don't know whether that helps or not. It's kind of confusing with regard to a commodity. The way that I would look at it for the commodity is that it's a fixed supply. So because it's a fixed supply, if we look at it from just a simple linear perspective, this is $1 increase up here is not the same as the size of the network as $1 increase down here. This is going to be a much, much bigger impact than up here. So the only way you can see that equal effect is if you change it to a logarithmic scale. So that's probably the easiest way for you to think about that. That would be my answer for you. It's kind of, you're asking, when would you use auto? I mean, auto, I'm not quite sure. That's just leaving it up to the, I don't even know what auto would default to. If I go, is there an auto setting? No, I don't even see auto. They'll do like index to 100 and percent. Obviously they're measuring relative performance to whatever the start of your study is. So you can see on this part of the screen, that's where the start of the study is. So now percentage moves are everything from that point in space and time. That could be handy for one, especially if you're looking at, like, say, year to date from January 1st. You can study a percentage move. Regular, as I said, this is like your linear, especially if you're a commodity trader, then 1 point is equal to X amount of dollars because you're trading on leverage. The percentage impact of 1 penny movement and relative price doesn't make a difference because you're trading a contract, and the contract is like, for example, like crude oil is like 1,000 barrels of crude oil. So the contract's so big that what you're really doing, over here, is this contract, at 1,000 barrels, right? So that's $70,000, $70,600, 7060. If you took it off at like 70 even, right? Well, that's 70,000 even. And so your profit or loss is just the difference between whatever you put it on and whatever you put off. And to control that contract, you actually put up what's called a performance bond. You don't actually own this thing. So I would use linear in a futures contract because 1 point is 1 point is 1 point. I would use logarithmic, like if I was studying stock, like growth, or if I was trying to see the actual growth of a commodity itself with a fixed supply. Keep in mind, a lot of commodities don't have fixed supply, right? They're constantly rising and falling as well. So keep that in mind. Bitcoin, I think this works well here, and especially things like POW coins that have that fixed supply. I like using the logarithmic chart to explain price action. What gets really interesting is when you have like POS coins and you try to use the logarithmic charts and the supply of coins is constantly expanding. That gets a little bit dangerous. And frankly, I don't even know what the answer is. So I don't know about auto. Log, we talked about, use that to measure growth. And then linear, it would be regular. We use that to trade commodities. 1 point is, 1 point is kind of idea. And something like a percentage is a good tool to use, like doing things like year-to-date performance and relative performance. A lot of relative performance charts are done on a percentage basis. So I hope that helps. Good question, though. Okay, when it comes to taking a trade and using the 2-to-1 risk reward, if a market is trending up, would you use a different approach since the market is going higher? I'd like to use an example like Bitcoin. Before the halving, Bitcoin historically tends to rally after the event. How would you go about applying the 5% risk of your stake with a 2-to-1, knowing there is probability the market is entering an uptrend and the market is a higher probability that I'm offering a higher yield in the following week months? Would you not set a take profit and change your stop loss when you get a new or high market structure? Sure, sounds good. The question here, I think, is really more about your trading plan and what it is you're trying to get out of trading. So if you're, swing trading, even day traders for that matter, But, if you're swing trading kind of idea, medium term, if you will, then we're trading lots and lots and lots of setups. And what we really want to do is we want to fill our table, right? That 100 paper trades you should be doing now in your spreadsheet. But ultimately down the road, when you're running your small business of trading, you want to fill that table with tons and tons of took this 2-to-1 setup, booked the profit, on to the next trade. 2-to-1 setup, took the profit, on to the next trade. 2.5-to-1 risk reward setup, took it, hit profit objective, on to the next trade. 2.1 risk reward, 2-to-1 risk reward, took the trade, stopped out, on to the next trade. And it's just, you are running the business of trading and you don't even give a shit about what the hell the asset is. In fact, Grim in the program, I'm sure he's already said it to you once, if not a couple times. I usually hear him say it a few times through his lectures to you guys. He likes to use the term that his setups and trading is asset agnostic, i.e. it doesn't matter what time of day. It doesn't matter what the asset is. He's really trading human psychological behavior patterns. That is one type of market participant. But that's not the only type of market participant. There's tons of different market types of participants. There could be our little old lady that comes in and buys an asset and, she was kind of interested in the market, and she got hooked up with this broker, and she said, look, I'm really busy doing other things, so don't bug me too much, but let's see if we can build a little portfolio and just give me some exposure in this space. So take less than 5% of your stake, throw it into a name at the bottom end of the range, work half on doubles, and you're banging out doubles. Technically, she could be long that same one asset forever. There's some assets that I've banged out like 10 doubles on them. I mean, just remarkable. It just keeps going and going and going and going and going, and I still have some on the books. So, it is what it is. They're not really a right or wrong way to trade. What really is most important is we just got to try and figure out what works for you. Maybe you aren't this 2-to-1 sort of setup trader coming in and trading the market on a daily basis. Maybe you're more like a Joe Sixpack, where I'm going to take 50% risk, so that means I can up my bet size. Instead of 5%, I'm going to risk 10% of my stake at an idea, but if it falls by 50%, I'm getting the fuck out. And then I'm just going to bang out doubles, right? And I could be long the thing forever. So that's another type of lower risk, sort of, kind of brokerage house client, kind of market participant. Not as conservative as the little old lady, but not nearly the insanity of like the margin trader. So, I don't know whether that helps you understand that there are a number of different ways to skin this cat. And really what we have to do is we have to figure out what works for you. And I'm getting the impression just reading this question that you don't really like this. This is too constricting for you. I don't mind the idea of you even building a setup that has a 2-to-1 risk reward, and at the 2-to-1 profit objective you sell 75% of the asset. Then you're going to move like stop to break even on the remaining and just see where the wind blows you. The bot setup itself, it has a 3-to-1 risk reward setup. I know, in fact, actually, David's getting pretty good at identifying megaphones. And I used to know a guy on the site who used to trade megaphones religiously. And usually megaphone setups, they're like 5-to-1 risk reward setups. So maybe that's sort of more down your alley. You want those big honking monster setups. It's fine. Got to figure that out. So is it you want to go 4.669 to 1 risk rewards? As somebody just said there a moment ago. Speaking of which, Mr. Foggenbaum, if we could maybe I gotta get working. If Mr. Foggenbaum, if you're watching, this site member has got his name Foggenbaum. If we gotta get working on meeting with your wife and talking a little bit legalese about all this stuff, because we're moving forward on this stuff, aren't we? Anyway, Mr. Foggenbaum, you know what I'm talking about. So the point here is there's not just one way. 2 to 1 is I need for you to get into the habit of forcing yourself that if you are right, you are going to get paid at least twice what you were willing to risk if you were proved wrong. That's really what I got to get you to learn. You got to get into that habit of forcing yourself to get paid when you're right relative to when you're wrong. That's where most people fail at this game. You want to sell 75% at 2 to 1, stop to break even on remaining and just see if you can manage the rest? We do that. In fact, level 3 program, I will officially give you permission to work stops, and we'll talk different strategies for stop management. But right now, I just want you to get into the habit of booking a win at that 2 to 1 and actually forcing yourself to make money from trading. Which sounds so funny. I mean, it's so ironic that 90% of the people that do this don't make money from trading. And yet what we do, that's almost ridiculous to even think. Why would you even bother do this game if you're not here to make money from trading? It's incredible. It baffles me. So, like I said, job number 1 is I got to force you to learn how to make money from trading. So let's book those 2 to 1s, see the results. Then once you actually start making money from trading, then we can start thinking about moving stops and staying in trades as long as possible. Okay, last question, then we'll wind it up here. In level 1, we are not learning about EMAs and MAs. Should we not use them during level 1? Do you find them to not be relevant? Just curious. Level 2, huge portion of the course. Big module, lots on moving averages. The problem here is just that there's so much that we have to teach you. And I can't possibly do it all in one course. So the way that I designed the level 1 was first we had to deal with the eating the vegetables. There's no way I was going to teach a course on trading. Keep in mind, people asked me to do this. There was no way I was going to teach a course on trading if it didn't start with the trading plan and understanding, fundamental drivers and big picture macroeconomics and all that kind of shit. So that had to be in there. Eating our vegetables. And then what I really wanted to do coming out of the level 1 class is I wanted you to have one trend following setup under your belt, the bot, and one range trading setup under your belt, the Altangonator. And understand how you can use simple price and volume momentum indicators to give you those divergent messages so that you have the fib tools that give you trade location, the volume, MACD, and OBV, Willy, price momentum tools to tell you when it's okay, that the market's actually stronger than what the market's telling you. And then things like candlesticks and double bottoms and inverted head and shoulders and all that kind of fun stuff to help you frame the actual trade. The 3-step process: location, indicator confirmation, market structure, go. So that was the big objective. And if you left level 1 learning that, then I think you understood the process, right? Eating your vegetables, working with a plan, risk management, blah, 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 blah. And you had a pretty good crash course on trading setups, 3 unrelated reasons, location, indicator confirmation, structure, go. And then finally, we finish off that level 1 program with a conversation about liquidity events and understanding that a lot of times the time of day that you're actually doing the trade can make a huge difference. And understanding things like news events as liquidity events, buy the rumor, sell the news kind of idea. Is that the end? Is that exhaustive? No, not even close. And really, anybody, whoever asks this question, ask any current level 2er. D-Born, you're in level 2. We were talking about this on Wednesday. I mean, he's hip deep in the shit. And I mean, we go deep. Level 2's horizontal support and resistance, hugely significant for traders. Moving averages, trend lines, trend channels, different types of trend lines, gaps, gap theory, volume profile. I mean, just tons and tons of different trade location tools. Then, of course, in level 2, we open up GAN. Yeah. Hey, Walter says, excuse me, Mr. GAN is feeling a little jealous and left out. So spend, at least a good 2.5 weeks just mulling over Mr. GAN and his contribution to the world. We talk a little bit about actual market structures, introduction to the futures industry, interpreting futures data, things like COT reports, things like the actual term structure itself in the futures industry. I mean, oh my goodness. So you're right. We don't cover everything in the level 1 program. You're absolutely right. It would be impossible. And I think right now, if I taught the course from sort of week 1 to the end, I think it's about somewhere around 40 weeks. Every single different module, it's about 40 different modules. So, what the hell am I supposed to do? I can't give you all 40 modules at once. And so that's why we broke it up the way that we did. So, I hope that helps answer your question. But you're absolutely right. Moving averages are critically important. But at the same time, too, I don't know whether we want to jump into moving averages right away. You really have to learn trade location, indicator confirmation, and I would argue moving averages are another indicator confirmation tool. And really, one might argue MACD, taught in the level 1 program, is actually a moving average study. So in a weird sort of way, in the level 1 program, you are being taught moving averages. Just probably not in the way that you're expecting to be taught them. All right, I hope that helps answer that question. It's a tough question, and certainly not an easy answer. I would love to be able to give you it all at once, but there just simply isn't enough time. And it takes, I would say, honestly, I've said this before, it takes about a year to do any job to really know what the job is. And I would argue, coming to TRI, it takes probably a good year of doing this shit. And at the end of that year, most people that I talk to that go through the process, they obviously become site veterans. And they're pretty darn good traders. Okay, I think I'm going to leave the rant at that. Sure hope you guys enjoyed the offering. Feel free to hit that like button, subscribe, ring Colleen's bell for the notifications, all that kind of fun stuff. I hope you got some value out of this. Since that asshole said that I'm a ruthless shiller and I have no conscience and I'm just a cocksucking YouTube motherfucking son of a bitch, I think was his words. No, you know what he said? He said, Brian, you're a handsome guy. That's what he said. All right, the only problem is I wish that she said I was a handsome guy. She always goes, oh man, he's ugly. Anyway, Mr. Great, if you could reach out to Loserhead there and maybe help him out, maybe you feel like you'll get some value out of this channel without feeling like he's getting shilled up the ass. I try to think that I do a positive thing here in this world. Maybe you can leave a comment and remind Mr. Loserhead there whether you think I'm doing good in this world or not. And whether you feel as though I'm an overt shill and I've got some sort of ulterior plan. I don't think I do. And as long as the general sentiment from like 99% of the world is, Brian, you're doing a pretty good job, and you have to deal with these outliers every once in a while, I'll just keep doing this. But I tell you, I understand why my CME boys kind of were like, Brian, you're just going to end up getting heartbroken trying to do this. It's not worth it. Here I am. I'm trying. So take it for whatever it's worth. Have yourselves a great day, everybody. Wish me luck with Liam. Off to Liam here soon. Actually, I'm wondering whether he's going to be affected by the emotional sort of kind of tangent I feel the world is on right now. So he should be a pretty good proxy. But wish me luck. We will have an awesome afternoon together, I hope. And we'll see everybody here bright and early tomorrow morning. All right, everybody. All the best. PMA for the win. And bye for now.